Ladies and gentlemen, thank you for taking out your precious time to attend the iconic event organized by National Financial Reporting Authority. This is a part of Iconic Week celebrations by the Ministry of Corporate Affairs, starting from 6th of June till 12th June. This program is being webcast live on YouTube and Facebook channels of NFRA. Honorable Minister of State, Corporate Affairs, Rao Inderjit Singh Ji, and Secretary, Ministry of Corporate Affairs, Shri Rajesh Verma Ji, has kindly consented to grace the event as Chief Guest and Guest of Honor. It is my humble request to kindly keep your mobile phones in switched off or in the silent mode. Thank you. Ladies and gentlemen, please be seated. Our chief guest and guest of... Ladies and gentlemen, let us all welcome our chief guest. Okay. Our chief guest has reached the premises and he would be joining us soon. Let us all welcome our chief guest, Honorable Minister of State, Rao Inderjit Singh Ji, Secretary, Ministry of Corporate Affairs, Shri Rajesh Verma Ji, Chairperson and members NFRA. Thank you, sirs and ma'am, for your gracious presence in the seminar. We are honored to have you here. I would request Chairperson NFRA, Dr. Ajay Bhushan Prasad Pandeji, to kindly welcome Honorable Minister with a bouquet of flowers. Thank you, sir. I would request Member NFRA, Srimati Samita Jhangran Ji, to kindly welcome Secretary, Ministry of Corporate Affairs with a bouquet of flowers. Thank you, ma'am. Honorable Minister, Secretary, Ministry of Corporate Affairs, Executive Body of NFRA, officers of MCA and NFRA, our friends from media, invited guests, our viewers who are watching us live on YouTube and Facebook. I, on behalf of NFRA, extend a warm welcome to you to the seminar on high-quality financial reporting framework through effective oversight, independent oversight. Today's seminar has been organized as a part of ongoing Iconic Week celebrations of Azadi Ka Amrit Mahotsav under the aegis of Ministry of Corporate Affairs, which has been kicked off on 6th of June 2022 with the blessings and guidance of Honorable Prime Minister Shri Narendra Modi ji and Honorable Finance and Corporate Affairs Minister Srimati Nirmala Sitharaman ji in Vigyan Bhavan. The official journey of Azadi Ka Amrit Mahotsav commenced on 12th of March 2021 with the flagging off of Dandi Padyatra by the Honorable Prime Minister that marked the 75-week countdown to the 75th anniversary of independence on 15th of August 2022. The celebrations of Azadi Ka Amrit Mahotsav would not end there but would continue a year thereafter till 15th of August 2023. अब आज के इस उत्सव को आगे बढ़ाते हुए मैं माननीय मंत्री जी से, सचिव महोदय जी से एवं नफरा के अध्यक्ष व सदस्यों से निवेदन करती हूं कि वे दीप प्रज्वलित करके इस समारोह का शुभ आरंभ करें। थैंक यू सर एंड मैम। दिए की ज्योति व सरस्वती माँ के आशीर्वाद के साथ अब हम आगे बढ़ते हैं। आई हम्बली रिक्वेस्ट चेयरपर्सन नफरा डॉक्टर अजय भूषण प्रसाद पांडे जी फॉर डिलीवरिंग हिज वेलकम एड्रेस।
Honorable Minister Sri Rao Inderjit Singh, Secretary MCA Sri Rajesh Verma, and all distinguished guests and experts who have come from all over the country to attend this program, and my colleagues from NFRA, ladies and gentlemen. Today, on behalf of NFRA, I extend my warm welcome to our Honorable Minister. I would also take this opportunity to welcome Sri Rajesh Verma, Secretary MCA, and all of you to this iconic event hosted by NFRA. As we all know that the whole country is celebrating 75th year of independence on 15th August 2023. The government has taken initiative of celebrating in the form of 75-week countdown, very well known to us as Azadi Ka Amrit Mahotsav. This week-long celebration was launched by Honorable Prime Minister earlier this week, followed by Ministry of Corporate Affairs celebration, which was launched by Honorable Finance and Corporate Affairs Minister. Today, we at NFRA have the privilege of celebrating this iconic event. Over these 75 years, so this is the time to not only celebrate but actually introspect, and also based on that introspection and also the current challenges, decide the future course of action, not for the next few years but for the next 25 years, because sometimes it is very critical that we while we are doing our meeting the current challenges and the current responsibilities, we should also look ahead. And if we don't take up those steps now, that where exactly we will be in the next 20-25 years, and if we don't initiate, then we will lag behind. So that is very, very critical, and that is why this celebration is very, very the timely and then the important. Now, during this period, so far as NFRA is concerned, I would like to mention here that our country has come a very long way in every sector of economy, including the financial sector. And then the progress and prosperity of any economy depends upon its financial system, that how sound and how robust it is, how credible it is, how much people are able to trust on this. And that is why it is very, very essential that we should have a credible financial accounting system, auditing system, and also the reporting system. And that is why in this background, and unless there is a trust in this, the people are not going to put money into this. I mean, we all know, whether it is the domestic investor or the foreign investor. And that is why building trust is very necessary. And that is why this, the financial reporting, the sound accounting system and auditing system, all are very, very necessary. Now, in fact, we are reminded of this message given by our Prime Minister on 1st of July 2017 on the occasion of Chartered Accountants Day. He said that the members of accountancy profession assume a critical role and responsibility in ensuring sound financial health of the economy, and highlighted the importance and the power of independent audit function. Honorable PM also reminded the member of accountancy profession to follow the path of integrity in discharging their critical role, and we all are part of that profession today. Until recently, we all know that the audit profession was guided by the principle of self-regulation and self-review. But certain events like the collapse of Enron, etc., highlighted the need for an independent regulatory body, which led to Sarbanes-Oxley Act in USA and setting of a PCAOB, an independent regulatory body in US, which was followed by the similar bodies in UK, for example, FRC in UK, CPAB in Canada, ACRA in Singapore, ASIC in Australia, CPAAOB in Japan, and so on. India also witnessed some such failures, and therefore it was felt that there is a need to have a similar institutional framework in our country too, which ultimately led to the institution of NFRA. And basically the objective was that create an institutional framework which can be benchmarked to contemporary global best practices and standards. And the NFRA thus was constituted on 1st of October 2018. The NFRA's objective, as we all know, that it's a continuous improvement of quality of corporate financial reporting and to inspire trust in this financial system. And it is not only to ensure audit quality of the auditor, but also the quality of financial reporting by the companies. The main objective, I must remind ourselves, all of us who are present here, is the main objective of NFRA is to continuously improve the quality of financial reporting in India, and which includes the setting high quality accounting and auditing standards in line with the international best practices, monitoring and enforcing compliance with those standards, promoting awareness with regard to those standards, and overseeing the quality of service of the profession associated with to ensure compliance with these professional standards. At present, a total 6,820 companies are under NFRA review, because as per the law, the listed company, and then there are certain other companies which qualify based on their net worth and other parameters, they come under the NFRA purview. This includes, this figure of 6,820 figure includes 5,563 listed companies, 1156 unlisted companies, and 101 companies under the special acts. These companies are called public interest entities, because of their large volume, and then the public money either way of shareholding or through the bank loans or the various other parameters. So they are the public interest entities. If you compare with those figures with the the PCAOB in US has almost a comparable number of companies under the review. I was told that in US, the PCAOB has 8,626 companies and 1708 audit firms under the review. They have established, because they were established almost about 20 years back, established resources and infrastructure. And through that infrastructure, they are able to audit on an average each year 190 companies, audit companies, and bring about almost 800 audit quality inspection reports. So even though NFRA, we are relatively a new organization, we were formed only towards the end of 2018, we also have to quickly come up and deliver performance which are which can meet these international benchmark, in the sense, because if you see the number of companies which come under the review is almost the similar. So we also need to set up a system which can actually we can conduct give so much of performance. But then for that we will of course require to increase our the infrastructure. But at the same time, what we are now today in this digital age, we are getting benefit is that instead of relying only on the physical infrastructure, we can utilize or exploit this technology and then the data, and then we can explore that how best we can use the technology and data to bring in the efficiency. In fact, I will remind you that you all being from the chartered accountant profession, in the 80s, the income tax, the audit which used to be done by the departmental officer, perhaps each income tax return used to be audited, right? And then when the number of returns increased, then they, over the period of time, they went into some random selection. And then over the last few years, through the technology, through the data analytics, through the data mining, they are able to select only the cases which are kind of fall into certain risk category, so that the large amount of the number of returns are actually not are audited. The total 7 crore returns are filed every year in income tax, and then the total number of returns which are taken for the scrutiny is less than 0.25%. So just imagine that by the use of technology, by the use of data analytics, they have been able to bring in that kind of an efficiency. So I think, the similar method, and that will be very objective, how the companies will be selected for, the quality reports, for the, review. Those things should not be left to, discretion of some people within NFRA or elsewhere, but actually it should be, the data should throw up and we should be able to select that. So I think, this is something, these are some of the challenges are there, and this all will be, the part of our vision. And in fact, the Honorable Finance and Corporate Affairs Minister, in her speech, she, on Tuesday, she mentioned that, these regulatory bodies, and she actually took name of NFRA and said that, it has, NFRA and CCI, regulators like that, they have to be ahead of the technology curve. And this is exactly, this is something, the challenge before us. And we are sure that, with all of you, with your ideas, your suggestions, we will be able to, definitely achieve that. We have a panel discussions today. From that, a lot of ideas will come. We also have, we conducted a quiz competition, and then the top participants will be facilitated by the Honorable Minister here today. And we also have one international guest, Suhei Noro, who is the Deputy Director of CPAOB. He's from the Independent Regulator of Japan. He will also be sharing global experience, his experience in this sector. And so at this stage, at this time, I would like to stop here and once again welcome all of you to this iconic event. Thank you very much.
Thank you very much, sir, for your wonderful words and motivating us for having a vision for the future times. I would now request Secretary, Ministry of Corporate Affairs, Shri Rajesh Verma ji, for delivering his special address.
Honorable Minister of State, Independent Charge, Ministry of Statistics and Program Implementation and Planning, and Minister of State, Ministry of Corporate Affairs, Rao Indrajit Singh ji, Dr. Ajay Bhushan Prasad Pandey ji, Chairperson NFRA, Srimati Smita Jhingran ji, Member NFRA, Shri Praveen Kumar Tiwari ji, Member NFRA, distinguished guests, ladies and gentlemen. We are celebrating this Azadi Ka Amrit Mahotsav. This is the iconic week. Tomorrow is actually the final day, 6th to 12th June. We have the iconic week for both the ministries, Ministry of Finance and Corporate Affairs. So this is a series of programs, and in run-up to this iconic week, several programs have been organized all over the country by various organizations under the aegis of Ministry of Corporate Affairs. Chairperson NFRA has already highlighted the importance of high-quality corporate financial reporting and auditing framework in any economy. Ministry of Corporate Affairs has a sheet anchor role to enable our nation with a robust and comprehensive financial reporting and auditing framework that is comparable to the contemporary global best practices. Our nation has acquired a significant position in the global business and trade scenario. This kind of a pivotal role comes with certain responsibility and accountability. Therefore, it becomes incumbent on us to implement sound and robust regulatory framework and structures that are necessary to protect the interest of various stakeholders, domestic as well as international. When we talk about high quality financial reporting framework, two areas form the bedrock of such a framework. One, of course, is the accounting standards or financial reporting standards, and second is the auditing standards. Chairperson has talked about challenges and future challenges which we have to face. Let me touch upon the historical aspect, because this is a journey of 75 years where we are reminiscing. So before, let me take you back to the memory lane, to the last century. Many of you may be aware that company form of business has been in existence in India for more than a century now. In 1913, we had the Indian Companies Act. It had 290 sections, which was enacted to consolidate laws relating to trading companies. It replaced the earlier Indian Companies Act 1882. 1913 Act had 6 sections relating to books and accounts and another 2 sections on audit. This act was again amended in 1930 to provide more adequately for the audit of the company's accounts and to pave the way for creation of an autonomous association of accountants throughout India. It underwent certain other changes in 1936. But in the post-independence era, a new act, Companies Act 1956, was enacted based on recommendations of some committees. This act had number of sections on accounts and audits of companies as a whole. Over the years, many provisions and changes have occurred were amended in 1956 Act, and a robust financial reporting framework emerged in India. 1975, actually, the reporting requirements for the auditors were laid down in 19 areas through something called as Manufacturing and Other Companies Auditors Report Order 1975. India was among the first countries to introduce such unique reporting requirements. Later on, this requirement has been amended from time to time, and today it is known as Companies Auditors Report Order 2020, CARO, the famously the abbreviation CARO. It started from 75, the journey. 1999, the accounting standards were accorded statutory recognition under the Companies Act. Again in 1999, India introduced major changes in accounting standards setting structure. Then there was an oversight body called National Advisory Committee on Accounting Standards, NACAS. That was constituted to examine the proposals of ICI and recommend the accounting standards and policies to the central government for notification. This was in line with the emerging global trend which was relating to the accounting profession. In 2006, a set of 29 accounting standards based on the prevailing international accounting standards were notified by the Ministry of Corporate Affairs. Now we come to the 21st century, the new era. As we all know, the Companies Act 2013 brought about a fundamental change in the area of corporate governance. There were 3 path-breaking reforms were part of this new act. Now, and this also paved a way for the first independent accounting and auditing regulator, Section 132, by way of setting up of the National Financial Reporting Authority, NFRA. In fact, in July 2014, the then Union Finance Minister announced a firm roadmap for implementation of Indian accounting standards converged with the International Financial Reporting Standards, IFRS, known as the high quality globally acceptable financial reporting standards. In a short span of time after that, MCA issued in 2015 a set of Ind AS based on the prevailing IFRS. This brought about a tectonic change in the quality of financial statements of the Indian corporates. Standards on auditing also received much needed statutory recognition under Section 143 of the Companies Act 2013. And finally, in October 2018, the central government established NFRA to focus on continuous improvement of corporate financial reporting. NFRA is a very unique, unlike many of its counterpart independent audit regulators, which was mentioned by the chairperson NFRA. NFRA is unique because its functions cover financial reporting process in its entirety, from recommendation of accounting and auditing standards to performing the role of independent audit regulator and ensuring compliance with these standards. And therefore, NFRA is expected to protect the public interest and interest of investors, creditors and other stakeholders across the entire gamut of corporate financial reporting process. In the short span of its existence, however, NFRA has made significant strides towards establishing itself as a major regulator. As we celebrate the Azadi Ka Amrit Mahotsav, we also take time to look at what more needs to be done to strengthen the NFRA, to enable it to discharge its functions effectively, its mandate of protecting the public interest. The government is continuously focused on further strengthening the NFRA. In this process, we are also looking into various recommendations given by the Company Law Committee with regard to financial and operational autonomy of NFRA and its powers under the Companies Act. I wish NFRA all the best in all its future endeavors and look forward to itself establishing as a world-class regulator in its field. I wish this seminar all the success. Thank you all.
Thank you, sir, for enlightening us about the journey of legislations related to corporate sector. National Financial Reporting Authority is a budding organization, and the words of encouragement from you would help us to grow further in achieving our mandate. Pluto has said, human behavior flows from 3 main sources: desire, emotion, and knowledge. To inculcate the interest of the younger generations in the audit regulations and compliance requirements, NFRA had conducted an All India quiz on auditing and the accounting standards in India. The quiz was run for more than a month on MyGov platform of Government of India and has seen the massive participation of more than 27,000 people. I would request Honorable Minister to felicitate the winners of the quiz competition with certificates and mementos. I would call the winners to come on stage one by one. Ms. Shikha Goyal, is it? Shri Mukul Bhatnagar, Shri Manish Kumar Tripathi ji, Shri Sahil Mittal ji, Shri Naman Kumawat, Thank you, sir, for felicitating the winners of the quiz. This will encourage them to achieve greater heights in future. We may have a group photograph of the winning participants with the dignitaries. The dignitaries may keep sitting and the participants will come and stand here. Thank you, everyone. All of us have been waiting for the address of Honorable Minister Rao Inderjit Singh ji. I would like to request Honorable Minister for delivering his address.
माननीय सेक्रेटरी कॉर्पोरेट अफेयर्स राजेश वर्मा जी, चेयरपर्सन नफरा डॉक्टर अजय भूषण जी, सदस्य नफरा स्मिता जिंगन जी, सदस्य नफरा परवीन तिवारी जी, बुजुर्गों, साथियों, भाइयों और बहनों, 75 साल हम सब मना रहे हैं आज़ादी का। ये दिन आप सभी को मुबारक। भारतवासी होने के नाते 75 साल हमारे और आपके आज़ादी के साथ के गुजरे हैं। ये हफ्ता कॉर्पोरेट अफेयर्स मंत्रालय को मुबारक। कल ख़त्म होने जा रहा है और जैसे मंच से पहले बोला गया, हर एक महकमे को एक एक हफ़्ता दिया गया है, एक आइकॉनिक हफ़्ता दिया गया है, जिसके अंदर वो अपनी उपलब्धियां क्या थीं, क्या हो सकती हैं, क्या खामियां थीं, क्या बचाव हो सकता है, इन सब के ऊपर चर्चा करते हुए 75 साल पूरे होने के उपरांत जब 100 साल पूरे होंगे तो आज से हम कहाँ हैं और कहाँ हो सकते हैं, उसका एक रोड मैप तय किया जाए। और उसी उपलक्ष्य के अंदर आज सभी को यहाँ पर आमंत्रित किया गया है। हम भी हिस्सा इस चीज़ के अंदर बने हुए हैं और मैं उम्मीद करता हूँ कि जिस तरह से यहाँ पर स्टेज से चेयरमैन साहब ने फरमाया कि हालांकि नफरा को केवल 3-3.5 साल हुए हैं जब से ये अस्तित्व में आया, लेकिन इन 3-3.5 साल के अंदर ही अमेरिका के तुलना में अगर देखा जाए तो उसकी बराबरी करने लग रहा है। 6,500-7,000 कंपनियों के करीब इनकी परव्यू के दायरे के अंदर हैं और जिस रफ्तार से ये चल रहे हैं, फ़िलहाल तो ये चेयरमैन साहब ही थे और हाल ही के अंदर हमारे 2 और मेंबर इनके ऊपर नियुक्ति हुए हैं। मैं समझता हूँ कि जिस रफ्तार से ये 3 साल में 3.5 साल के अंदर इन्होंने रफ्तार पकड़ी है, शायद थोड़े आने वाले समय के अंदर ये अमेरिका को पार कर जाएंगे। हमारे सेक्रेटरी साहब भी कह रहे थे कि कंपनीज़ का इतिहास बताया, हिंदुस्तान के अंदर किस तरह से कंपनियां भारत के अंदर बिजनेस करने लगी हैं। मैं अगर से थोड़ा सा पहले चले जाऊं तो मैं जिक्र करना चाहता हूं ईस्ट इंडिया कंपनी का भी। जब हमारे को कंपनियों का जिक्र ही नहीं आता था तो उस टाइम एक ऐसी हस्ती आई हमारे बीच के अंदर जो उंगली पकड़ करके हमारे साथ लेन देन, खरीद फरोख्त, बिजनेस करना चाहती थी और धीरे धीरे उसने हमारा हाथ पकड़ा, हमारी छाती पे चढ़ गया और हिंदुस्तान के ऊपर शासित हो गई। 200 साल इस कंपनी ने भेड़ की खाल पहन करके, भेड़िया बन करके हिंदुस्तान के ऊपर अत्याचार किया। और अगर इकोनॉमिस्ट को माना जाए, सोचा जाए, उनकी बात सुनी जाए, आप मेरे से बेहतर जानते हैं कि जब 18वीं शताब्दी के दौरान हिंदुस्तान के ऊपर पूरे तौर के ऊपर फतह पा ली थी तो उस टाइम विश्व के इकनॉमी के अंदर हिंदुस्तान का हिस्सा 24-25% हुआ करता था। और 200-250 साल के बाद जब अंग्रेज़ हमारे यहाँ से छोड़कर गए सन 47 के अंदर, तो कुल मिलाकर के हमारे पास 3% वर्ल्ड इकोनॉमी का हिस्सा बचा। यानी कि कहाँ वो बुलंदी थी 24-25% की और कहाँ पर आकर के हमको टेक दिया 200 साल के भीतर भीतर केवल 3% के ऊपर। और जब हम आज़ादी पाए उस टाइम के ऊपर सबसे ज़्यादा हमारी इकोनॉमी का हिस्सा एग्रीकल्चर हुआ करता था, यानी 60% GDP हमारा एग्रीकल्चर हुआ करता था। और जब हम बात करते हैं, सोचते हैं कि ओल्ड सिल्क रूट, हिंदुस्तान बड़ा मुल्क था, ईस्ट की तरफ जाएंगे, चाइना जाएंगे, इंडो चाइना जाएंगे, थाईलैंड जाएंगे, तो जो लोग देश से बाहर गए, हमारे पूर्वज हमको ये सोचने पे मजबूर कर देते हैं कि जब हम वियतनाम जाते हैं, जब हम कंबोडिया जाते हैं, इन क्षेत्र का नाम इंडो चाइना क्यों है? चाइना के एकदम सटे हुए हैं, लेकिन नाम इनका इंडो चाइना। इंडिया पहले क्यों आता है? चाइना इंडिया क्यों नहीं था? ये वो इसलिए कि उस दौरान, उन शताब्दियों के अंदर हमारी हैसियत चाइना से अव्वल थी। हमारे लोग ज़्यादा पढ़े लिखे थे, हमारी हैसियत अव्वल थी, देश के अंदर थी, विदेश के अंदर भी थी। आज उसी लक्ष्य को हासिल करने के लिए इस 100 साल की आज़ादी की अवधि के अंदर हम और आप अगर मिलकर के प्रयास करें तो शायद वो मंजिल हमारे को मिल जाए। और मैं कह रहा था आज़ादी के दौरान एग्रीकल्चर 61% ऑफ द जीडीपी, अदर सर्विसेज थोड़ा बहुत, प्राइवेट एंटरप्राइज मोर और लेस नॉन एग्जिस्टेंट एक्सेप्ट फॉर टाटाज एंड बिरलास परहैप्स, छोटे छोटे कारोबार बहुत कम। पर इन पिछले 75 साल में क्या हुआ? द न्यू किड्स ऑन द ब्लॉक हैव मेड इंडिया अ प्रॉस्परस नेशन। एंड हु हैज डन इट? Services have come into force, infrastructure companies have come into force, manufacturing, industry, and of course, for getting direct foreign investment, the rule of the law. This is something that China does not have and we have. इस तौर के ऊपर आज के दिन ये सारी जो हमारे पास संपत्तियां हैं, इसको जुटा करके हम 100 साल का लक्ष्य पूरा इस तौर पे करना चाहते हैं कि जो हिंदुस्तान पहले सोने की चिड़िया होती थी, क्या इस बार भी वो बन सकती है? और क्या विश्व को ये देश दोबारा से एक रास्ता दिखा सकता है? और रास्ता कौन सा दिखाना चाहते हैं? जो ईस्ट इंडिया कंपनी थी उस वाला नहीं। हम रास्ता वो दिखाना चाहते हैं जो आज भी हिंदुस्तान के कई कोनों के अंदर आपको नजर आएगा। आप रिमोट एरियाज के अंदर चले जाइए, नॉर्थ ईस्ट के अंदर चले जाइए, आप पहाड़ों के ऊपर चले जाइए, उत्तराखंड में जाइए, आप हिमाचल प्रदेश के अंदर चले जाइए, लोग अपने घर के ताला नहीं लगाते, लोग अपनी दुकान के ऊपर ताला नहीं लगाते। ये छल और कपट जो हिंदुस्तान के जहन के बाहर की हुआ करती थी, ये सारी की सारी ईस्ट इंडिया कंपनी वालों ने हमारे को सिखा दी कि किस तरह से अपना मकसद पूरा करने के लिए दूसरे की ऐसी तैसी पेड़ दो। ये हमारे कायदे में नहीं था, हमारे गुरु थे उनके कायदों में नहीं था। हम एक दूसरे की मदद करने के ऊपर आमदा थे। जो लोग हमारे पास आते थे उनको हम शामिल कर लिया करते थे। लेकिन आज के दिन ये जो रेलिक के तौर के ऊपर एक दूसरे का सस्पिशन है कि भाई ये नॉर्थ का है, ये ईस्ट का है, इसकी ये जात है, उसकी वो जात है, ये पढ़ा लिखा है, ये अंग्रेजी बोल सकता है, ये नहीं बोल सकता है, ये सारी चीज़ें आज के दिन हमारे अंदर जो दरार पैदा की हुई हैं, इसको समाप्त करने के लिए मोदी सरकार आज के दिन वचनबद्ध है। हमने 8 साल के अंदर प्रयास किया है। हम हो सकता है जितना भी लोग हमारे को समय देंगे उसके अंदर भी करेंगे, लेकिन ये देश मोदी सरकार से नहीं बनता या मेरे से नहीं बनता, यहाँ 5 बांधते बैठे हैं स्टेज के ऊपर, इनसे नहीं बनता। ये देश तो हम और सब मिल करके मिलाएंगे, जुटाएंगे, कंधे हल के पीछे अपना कंधा लगाएंगे, जब ही जाकर के ये देश आगे बढ़ सकता है। तो मैं इतना ही आज के दिन केवल करना चाहता हूँ कि जो पुरानी हमारी परंपराएं थीं उसके ऊपर अमल करने के लिए हम सब वचनबद्ध होने चाहिए। और ये जो थानेदार हैं, मैं समझता हूँ किसी तौर पर थानेदार ही हैं, बिजनेस के ऊपर कभी नफरा हो गया, कभी सीसीआई हो गई, कभी और हो गया। भाई ज़रूरत क्या थी? होनी नहीं चाहिए थी, लेकिन हो गए, क्योंकि हमारे पास अभी तक वही पुराना माइंडसेट है जो गोरा हमारे को बिकवीत करके गया है। हो सकता है कि आज नहीं तो हो सकता है 25 साल बाद इनकी शायद ज़रूरत ही ना पड़ जाए। अगर हम पुरानी परंपराओं के ऊपर चलने लग जाए तो शायद ज़रूरत ना पड़ जाए, लेकिन फ़िलहाल है। और मैं हवाला देना चाहता हूँ रूपर्ट मर्डॉक का। सब चिल्लाते हैं हिंदुस्तान के ऊपर, ख़ास तौर पे कहते हैं कि भाई ये लोग फ्रीडम ऑफ स्पीच नहीं मानते, लोग को जो कहना चाहते हैं उसको कहने नहीं देते। और हमारा खुद का मीडिया चिल्लाता रहता है सेल्फ रेगुलेशन, सेल्फ रेगुलेशन, सेल्फ रेगुलेशन। क्या होती है सेल्फ रेगुलेशन? टीआरपी बन जाए आपकी तो ठीक है, रेगुलेशन जाए भाड़ के अंदर, और नहीं बनती है तो सेल्फ रेगुलेशन। मैं आज के दिन ये कहने पर मजबूर हो रहा हूं कि अंग्रेजों जैसा देश जिसने अंग्रेज साम्राज्य जिसके ऊपर एक समय के ऊपर सूरज ही नहीं डूबा करता था, रूपर्ट मर्डॉक ऑस्ट्रेलिया से एक बंदा आया और हलचल पैदा कर दी इंग्लैंड के अंदर। और सारे ऑपोजिशन वाले और सारे सरकार वाले दोनों बैठ करके और बातचीत किए कि वी बेटर हैंग टुगेदर और वी विल बी हैंग्ड सेपरेटली, एंड दे पास्ड अ लॉ, एंड रूपर्ट मर्डॉक वाज बैंड, हिज कंपनी वाज बैंड इन इंग्लैंड। जो हमारे को आज के दिन सबक सिखा रहे हैं, नैतिकता सिखा रहे हैं, उन्होंने खुद तो इस तौर के ऊपर मीडिया के ऊपर अपने अंकुश लगाए हुए थे। तो मैं आज यूँ कहना चाहता हूँ कि सारा विश्व ये उम्मीद कर रहा है, शायद उम्मीद ना कर रहा हो, लेकिन ये कईयों को तो भय भी है कि भारतवर्ष अगले 25 साल के अंदर एक बहुत अच्छा समृद्ध देश बन जाएगा। तो कुछ लोग हमारी टांग भी खींच रहे हैं। और मुझे याद आता है कि मोहम्मद इकबाल का एक शेर है, हमारे इस मुल्क का, पैदा इस मुल्क के अंदर हुआ, बाद के अंदर पाकिस्तान चले गए, उनका एक शेर है, मेरे को याद आता है, और वो फरमाते हैं, उसी से मैं कहना चाहता हूँ कि हमारा जैसा मुल्क भी बहुत बड़ा मुल्क है, बहुत कठिनाई हमारे सामने आने वाली हैं, लेकिन उसका फ़ायदा भी हम ले सकते हैं। और मोहम्मद इकबाल के शेर के अंदर मैं समअप करना चाहता हूँ, वो कहते हैं, तूंदिए बादे मुखालिफ से न घबरा ए उकाब। जो लोग थोड़ी बहुत उर्दू जानते हैं उनको मालूम होगा, तूंदियाँ तेज़ रफ्तार, तूंदिए बादे मुखालिफ फास्ट ब्लोइंग एडवर्स विंड्स, तूंदिए बादे मुखालिफ से न घबरा ए उकाब। उकाब इज़ अ ईगल, द लार्जेस्ट वन ऑफ द स्पीसीज इन फैक्ट। तूंदिए बादे मुखालिफ से न घबरा ए उकाब, ये तो चलती हैं तुझे और ऊपर ले जाने के लिए। This is what Iqbal expected, and this is what we hope to achieve in the next 25 years. I wish you all the best. Thank you.
मैं माननीय मंत्री जी को, हम सबको भारत के सोने की चिड़िया वाले इतिहास को याद दिलाने के लिए, वे आगे बढ़ने के लिए प्रोत्साहित करने के लिए धन्यवाद करती हूँ। मैं अब नफरा के अध्यक्ष डॉक्टर अजय भूषण प्रसाद पांडे जी को निवेदन करती हूँ कि वे माननीय मंत्री जी को मोमेंटो देकर सम्मानित करें। I now request Member NFRA, Shri P.K. Tiwari ji, to give a memento to Secretary MCA, Shri Rajesh Verma ji. Thank you, sir. Ladies and gentlemen, we have now come towards the closure of the inaugural session. The celebration of 75 years of India's independence has prompted us to develop a vision for future growth and achieve new heights for the country in the years to come. This session has been enlightening for all of us with the words of wisdom by Honorable Minister and encouragement and guidance of Secretary, Ministry of Corporate Affairs. I would now like to request Member NFRA, Shri Praveen Kumar Tiwari ji, to propose a formal vote of thanks to the Chief Guest and the Guest of Honor.
Honorable MOS for Corporate Affairs, Shri Rao Indrajit Singh ji, Secretary, Ministry of Corporate Affairs, Shri Rajesh Verma ji, Chairman, National Financial Reporting Authority, Shri Ajay Bhushan Prasad Pandey, distinguished guests, colleagues, ladies and gentlemen, good afternoon. On behalf of NFRA, I feel privileged to propose this vote of thanks. First and foremost, we thank the Honorable MOS for agreeing to grace this occasion and delivering an inspiring speech. Honorable Minister has highlighted several important themes, including the importance of inculcating our cultural value system and the critical need for independent regulation. Special thanks are due to Secretary Corporate Affairs, Shri Rajesh Verma ji, who has been a pillar of strength for NFRA. Thank you, Mr. Verma, for tracing the historical evolution of corporate law in India and explaining the corporate reforms undertaken in the recent times. NFRA will keenly look forward to future reforms and measures aimed at strengthening NFRA. On its part, NFRA is committed to conforming to the highest international standards and being in league with the best audit regulators internationally. Our grateful thanks to our distinguished guests today, including from the Ministry of Corporate Affairs, regulatory bodies, and other organizations, for sparing time on a holiday to grace this occasion and boost the confidence of the officers and staff of NFRA. We truly appreciate this gesture as we celebrate together this Azadi Ka Amrit Mahotsav. Thank you once again. Jai Hind.
Ladies and gentlemen, please remain seated in your seats. We will be starting with our technical session soon. The next session is by a representative from NFRA's counterpart in Japan. So we will be connecting with him in a minute. Should I start? Mr. Noru has already joined, so we will be starting with our technical session. Ladies and gentlemen, please have your seats. We are now beginning with the first technical session of the day. After this session, we will be having a tea break at 4:35 p.m. Okay. Rick Warren, a famous author. Can I have your attention, please? Rick Warren, a famous author, has said, while it is wise to learn from experience, it is wiser to learn from the experience of others. It is a golden opportunity that today we have with us a representative from NFRA's counterpart in Japan, CPAAOB, that is Certified Public Accountants and Auditing Oversight Board. Let us welcome Mr. Shuhei Noru, Deputy Director, CPAAOB, Japan, who is connected with us online from Japan. Mr. Shuhei has extensive experience of inspection on audit firms and dealing with international affairs in CPAAOB. Now I would hand over the stage to Mr. Shuhei for sharing his rich experience about review of audit quality and financial reporting.
S rating. And inspected firms are required to inform executive summary of the inspection report and the overall inspection rating to audit committees of their audit clients. So audit committees can compare the audit firm's overall inspection rating with other audit firms' rating by this published mapping. And then I'd like to introduce some example of our inspection findings. At first, I'd like to introduce inspection findings on individual audit engagements. So first one is related to audit planning from mid-tier or smaller firms case. So there were changes in the business environment and decline in the business performance of the audit clients during the fiscal year. However, audit team did not consider the necessity to revise the audit plan, such as reassessment of materiality. Next one is audit evidence from large firm case. Audit team performed physical inventory observation. However, the team did not obtain sufficient and appropriate evidence on the completeness and accuracy of records of inventory taken by the clients. Third one is identify and assess the risk of material misstatement due to fraud from a large firm's case. Audit client engages in wholesale sales of beverages and retail sales of beverages using vending machines. Retail sales through vending machines accounted for 40% of the overall sales. However, audit team did not sufficiently evaluate the risk of material misstatement due to fraud related to vending machine sales. So I'd like to continue to explain about the inspection findings on audit engagements. Next one is professional skepticism and reasonableness of management, so client management assumptions from mid-tier or smaller firm case. Audit clients established a new subsidiary, and the subsidiary was in the excessive debt status. However, audit team evaluated the reasonableness of the subsidiary's short-term business plan only by qualitative nature, not by quantitative nature. Next one is group audit findings from large firm case. The group audit team identified fraud risk of components and instructed to component auditor on the response to the risk. However, the group audit team did not obtain from the component auditor the result on planned procedure to respond to the fraud risk. Therefore, did not evaluate the appropriateness of the response. And then I'd like to also touch upon inspection findings on the firm-wide quality control system. First one is response to changes in audit firm's management environment from smaller firm case. So our audit firm expanded the size after the merger with another firm. However, firm's CEO did not sufficiently understand the required levels of the quality control, firm-wide quality control system suited to the size and lacked awareness of the need to take prompt action. Next one is ethics and independence from mid-tier smaller firm case. Audit firm continuously received from audit clients special audit fees. Apart from audit fees, and continuously provided product coupons to audit clients' executives. And the last one is training from large firm case. So continuing professional education, CPE, is mandatory under the Certified Public Accountant Act in Japan. Audit firm was not aware that staff could concurrently take multiple training programs through the firm's internal e-learning system. And some staff actually concurrently took multiple training programs. And then next, I'd like to explain our recently published basic policy for monitoring audit firms for 3 years from this April to March 2025, published in this May. So we will effectively and efficiently monitor audit firms based on the current fast-moving circumstances, such as digitalization of audit work and remote audit, impact from the changes in the international situation on audits of global companies, and revised audit standards and ethical requirements. And objectives of our monitoring are to continuously encourage audit firms' spontaneous efforts to improve their own audit quality and to ensure proper operation of audit firms, including establishment of quality management system. So first main focus of the basic policy is to confirm and review the status for the smooth implementation of quality management standards. Japanese quality control standards were revised following the introduction of International Standard on Quality Management Systems, ISQM. And audit firms are introducing a quality management system based on a risk-based approach. And for large audit firms, revised quality management standards are implemented starting from audit of financial statements for the financial year starting or after next July. And the second main focus is to ensure and improve audit quality at audit firms conducting audits of listed companies. So we observe continuous trends of auditors change, transition from large firms to middle-tier or smaller audit firms. So we will have a greater emphasis on inspections of smaller firms, particularly those of urgently needed to ensure improving audit quality. So this slide is showing some useful links. We publish a monitoring report every year to explain the overview of the audit industry and our oversight framework to the general public in order to narrow their expectation gaps. And the case report from audit firm inspection is our public report on inspection findings. Inspection findings are categorized into detailed areas in the report. And we publish an English version of both reports. And this is a reference on category of inspection findings from program year 2018 to 2020. We publish categories of our inspection findings in the monitoring report divided by large firms and middle-tier and smaller firms. And in both charts, we can see a higher ratio in substantive audit procedures, audit of accounting estimates, and response to fraud risk. So basically, those are overview of our inspection system. And I'd like to touch upon the overview of the International Organization of Audit Regulators, IFIAL, also because activities on IFIAL is also an important part of our monitoring activity on audit firms. So IFIAL is abbreviation of the International Forum of Independent Audit Regulators, and it was established in September 2006, and its objective is the improvement of global audit quality. And currently there are 54 member jurisdictions, but however, we are still waiting for participation from India. And if we are established a permanent secretariat, kind of headquarter secretariat in Tokyo in 2017. Currently, chair of IFIAL is Dwayne Disparity, board member of USPCOV. And actually, vice chair of IFIAL is Takashi Nagaoka, deputy commissioner of for international affairs of Financial Services Agency Japan. And executive director is Carl Lena. Then I'd like to introduce the recent activities of IFIAL. So IFIAL held a virtual plenary meeting in this April. Main focus topic was the transition to the new normal from pandemic. And the keynote speech addressed on pervasive global trends impacting on society, such as information asymmetry and disruptive impact from rapid change from technology. And we discussed impact from ESG of financial reporting. And IFIAL introduced a new category of IFIAL membership in order to enable eligible independent audit regulators being still in the early stage of developing audit oversight programs to benefit from engagement with IFIAL. And IFIAL holds annual inspection workshop to share experience and challenges of inspection. Currently, we are discussing with audit networks and also among IFIAL members on the implementation of international standards on quality management, ISKM1, impact from technology audit tools on audit quality, and impact from COVID-19 pandemic on audit quality. Lastly, I'd like to touch upon the benefit from being an IFIAL member. So IFIAL can build each member's capability by learning from other IFIAL members' knowledge and experience through working group activities, as well as workshops such as inspection workshop and enforcement workshop. IFIAL is making efforts to promote sustainable improvement in global audit quality. Example is a meeting with leadership of largest audit networks and outreaching collectively to stakeholders such as investors and audit committees. And IFIAL is enhancing the collective impact of the audit regulatory community. Examples are delivering views to international standard setters such as IWSB and dialogues with other international organizations such as IOSCO. And above all, members can expand a cooperative relationship with other FER members. So this is the end of my presentation, and happy to take any comments or questions.
Good afternoon, sir. Am I audible to you? Am I audible to you, sir? Good afternoon, sir. Monica Dhawan this side, and I have a question for you. So my question is, sir, you have mentioned about inspection of firm-wide quality control system. So how do you think that evaluation of that quality control system is important?
Yes. Thank you very much for your question. So we originally focused on evaluating the firm-wide system of quality control at the very beginning of the establishment of CPAOB in 2004, because the quality control system is what drives audit quality. And when you think about the elements of the quality control system, at the top and governance of the firm very much influence the culture and behavior of the firm's staff. And other elements like client acceptance, the supervision and review on audit work papers, the consultation and engagement quality control review are the process to ensure appropriate audit engagements. And the ethics and independence, the hiring, education and trainings are the process to ensure appropriate human resources. And to ensure these systems function properly, audit firms establish policies and procedures for quality control role and monitor how those systems are working and make remediating efforts found from their internal review or external review. Therefore, we have interviewed with audit firms' leadership and review the documents on audit firms' policies and procedure for quality control in our every inspections.
Thank you so much.
Good afternoon, sir. So thank you for delivering a valuable and informative presentation. I have just one question, sir. Sir, you have mentioned that there has been a trend and the movement of large private firms to smaller firms. So how do you think the CPAOB is dealing with these kinds of trends?
Thank you very much for your good questions. So listed companies audit is actually still dominated by Big Four firms. So in terms of number of listed companies, 70% are audited by Big Four. There are 3,800 listed companies in Japan, and 2,600 are audited by Big Four. So in terms of market capitalization, actually 90% were audited by Big Four. However, we have seen some changes from Big Four to smaller firms in the number of the listed company audit. There are 210 auditors changed last year, and among them, 130 were Big Four to middle tier or smaller firms. So it is, in a sense, good trends if more firms are capable of auditing listed companies. However, Smaller firms tend to have less established quality control systems and weaker resources. So we are cautious about the audit quality of those firms.
Thank you, sir.
Good evening, sir. Sir, it's been really good listening to you and learning about how oversight over financial reporting is done in Japan. Sir, I have a question for you. So you explained about IFER. So can you also explain how IFER can support India and NFRA particularly?
Okay. Thank you very much for your good question. So I think biggest value of the IFER membership is certainly the sharing and experience, exchange views and experience. So audit regulators are tackling similar challenges, sometimes in a different ways. So I think we need to learn from other regulators to effectively perform our inspections and monitoring. So I really hope Indian NAFLA can join the IFER.
Thank you, sir.
Thank you, Mr. Shuhei, for an enlightening presentation and taking up the questions. Experiences of CPAAOB in inspections of audit firms and knowing about policy for monitoring audit firms has been very informative for us. We really appreciate that you made yourself available at this hour on a holiday and shared your experiences. At the end, I would like to express my gratitude to the viewers who have asked the questions and made the session interactive. Thank you so much. Ladies and gentlemen, we will now proceed for the tea break. Tea break is for 20 minutes and we will assemble again at 4:50 p.m. for the panel discussions. Thank you. Ladies and gentlemen, welcome back. I hope you had a refreshing tea break. Everyone may please grab their seats. Welcome back everyone. I hope you had a refreshing tea break. We will be starting with our first panel discussion. The topic is Independent Audit Regulators, India and Global Scenario. Mr. Nilesh Inapakurti, Manager NFRA, will be making a short presentation to set the stage for panel discussion. Shri Paveen Kumar Tiwari ji, Member NFRA, will be moderating the discussion. Senior Chartered Accountants, CA, PR Ramesh ji and Dr. Ashish Bhattacharya ji are the panelists. Without taking any further time, I would request Mr. Nilesh to present the topic.
Thank you, Swati ji, and good evening, ladies and gentlemen. We have assembled here for a panel discussion on the independent audit regulators, India and the global scenario. In the aftermath of major accounting scandals and corporate failures such as Enron, WorldCom in USA, there felt a great need for to strengthen the regulatory structures over auditing and accounting matters of public interest entities. In the concern of the public interest, many jurisdictions have constituted regulatory and oversight organizations independent of the accountancy profession. The International Forum of Independent Audit Regulators, in short IFIAR, was established in 2006. IFIAR has developed 11 core principles. The audit regulators are expected to implement these principles. This slide shows the fundamental elements of the 11 core principles, which the panelists will further deliberate and discuss upon. This slide provides a bird's eye view of major regulatory functions of the independent audit regulators of 10 countries. As we can see, the major functions of the independent audit regulators are standard setting, audit oversight and inspections, registration or licensing of the regulated entities, disciplinary and enforcement functions. Except India, all other regulatory bodies are involved in either registration or licensing of the regulated entities, that is, the audit firms and the auditors. Further, some of the countries like India, Malaysia, Japan, South Korea are also part of standard setting along with the professional accountancy bodies of their respective countries. This slide provides an aerial view of the most frequent audit quality observations noted by the regulatory bodies after conducting of their audit quality review internationally and in India. The major audit quality deficiencies that were noted by the regulators are auditors' independence, risk of material misstatement, going concern, related party transactions, internal controls, and audit documentation, to name a few. So now I will briefly touch upon the role and powers of NFRA. Section 132 of the Companies Act 2013 states that NFRA shall make recommendations on formulation and laying down of accounting and auditing standards or policies, monitor and enforce compliance with accounting and auditing standards, oversee the quality of services of the professions, perform such other functions as may be prescribed. NFRA has powers to impose sanctions on the defaulting auditors and the audit firms in the form of monetary penalties or debarment. Ladies and gentlemen, NFRA was established as an independent audit regulator in October 2018. So far, NFRA has issued 5 audit quality review reports and 20 are in the pipeline. We have also issued 3 disciplinary orders against the defaulting auditors and the audit firms and 2 consultation papers. All these reports are available online in our website nfra.gov.in. With this brief overview, I now request Shri Praveen Kumar Tiwari, member NFRA, to take this session forward.
Thank you, Nilesh, for that crisp and brief introduction. Good afternoon, ladies and gentlemen. Chairman NFRA, thank you very much for being present here. As you would have noticed that we planned a discussion around today's topic, that is independent audit regulators, India and global scenario, around the core principles established by the International Forum for Independent Audit Regulators. And the reasoning behind centering the discussion around core principles was as follows. If you look at the other areas of the financial sector, banking, insurance, securities, anti-money laundering, combating the financing of terrorism, they're all regulated or governed by the core principles of the international bodies that establish the standards in those areas. For example, you might have heard about the Basel core principles on banking supervision. You might have heard about the International Association of Insurance Supervisors core principles on insurance industry. You might have heard about the securities sector core principles established by the International Organization of Securities Commissioners. And you definitely would have heard about the anti-money laundering, combating the financing of terrorism core principles. They are called recommendations established by the FATF. Now, they are all mandatory. Not only mandatory, but each jurisdiction has to be formally evaluated on those core principles. The recommendations are made, that deficiencies are notified, and the countries concerned have to take corrective action. And there's a formal follow-up process for that. Now, compared to that, the IFIER core principles, which were established relatively recently in 2011, they are not mandatory. They are recommendatory in nature. It is expected that the independent audit regulators will implement them. But looking at the future, we are having the discussion during the Amrit Kal, and which is futuristic. I have no doubt in my mind that down the line they are going to be binding. Once this IFR as a body acquires bigger stature, at the moment there are only 54 countries. So once it acquires a more widespread presence, there is absolutely no doubt that every member regulator will be expected mandatorily to implement the core principles. Therefore, very consciously we selected the discussion to revolve around the core principles. Having said that, for the today's panel discussion, we have divided the areas covered by the core principles into two broad areas. One is about the legal and institutional requirement, which will be done by dealt with by panelist 1, and Dr. Bhattacharya sitting on my right, and the other broad functional areas under which the remaining principles fall, they pertain to operational and functional requirements, and they will be dealt with by panelist 2, CA PR Ramesh, who is sitting on my left. So with that brief introduction, let me say a few words about our panelists today. They are people of great eminence. Dr. Bhattacharya, sitting on my right, is currently working as a distinguished professor at Department of Finance, Accounting and Control, Shiv Nadar University, and as a member of the Accounting Standards Board of the ICAI. Before joining the Shivanadar University, he has worked with a number of academic institutes, including IMT Ghaziabad, IIM Kolkata, SPJ, IMR, and IICA. He also served in the Institute of Chartered Accountants of India as technical director. Before shifting to academia in 1993, Professor Bhattacharya held leadership positions in public sector enterprises and a multinational company for 20 years. A few words about Mr. Ramesh, sitting on my left. Mr. Ramesh is currently working as an independent non-executive director of Nestle India Limited. He is a fellow member of the Institute of Chartered Accountants of India and was formerly the chairman of Deloitte India. He has over 40 years of experience. His persona doesn't betray that. He looks younger than most of us. Mr. Ramesh has been associated with various regulatory bodies such as SEBI, the Committee for Reforming the Regulatory Environment for Doing Business in India, set up by Government of India, Technical Committee to review the form and presentation of the balance sheet of RBI, and Insurance Regulatory and Development Authority's Standing Committee on Accounting Issues. He is also an invitee to the committee set up by the RBI to assist the convergence to IFRS by banks. So with this brief personal introduction, now let me invite panelist one, Professor Bhattacharya. Now, for his convenience and also for the convenience of the audience, we have broken down the issues into 6 major issues on which we requested Professor Bhattacharya to dwell upon, considering that the time at our disposal is not very much. So those issues are on the screen before you. Number 1, should ethical and independence standards be also a part of the Companies Act? Challenges remaining in India in terms of legal and institutional requirements for independent audit regulation. For example, more clarity required on what constitutes non-audit services. Any challenges or concerns regarding the present set of standards on auditing? For example, the accountabilities of principal and component auditors, practical model for financial independence, challenges facing the regulator in banking, independence of staff from audit profession and technical competence, and lastly, the way forward for NFRA, considering it is a very new organization. So over to you, Professor Bhattacharya. Thank you very much.
Good evening, Mr. Tiwari. Good evening, Mr. Pandey, Ms. Jingram, and friends. It is a great opportunity for me to be here and speak about NFRA, a new body which is taken the responsibility to transform the auditing and accounting profession. And transition in any era is painful, but definitely it moves towards a better future. Self-regulation has given way to independent regulation across the globe, because it was thought that at some point in time when there were failures in corporate governance, the credibility of the auditing profession was lost. We don't know really actually whether it was lost or not. As a student of commerce, finance, economics, I can tell you that in any capitalist economy, whether there is an independent regulator or self-regulator, failure will always be there. Frauds will be committed in every decade. And therefore, whether credibility was lost or perceived to be lost, that we cannot really say that. Yet, we have to catch up with the global trend, and independent regulation is something that is better than self-regulation. And therefore, today's deliberation which we are talking about directed towards how the future of NFRA should be. I would like to mention here that every regulator works within an ecosystem and also influences the ecosystem. And it cannot be different when we talk about NFRA. It works within an ecosystem. Sometimes or greatly it is bounded by the law that is being framed, which has created the organization, and also with informal institutions, informal players, informal actors in the ecosystem. And it also influences the ecosystem, as it has already shown that it has signaled very well in the first 3 years that the ecosystem is changing, likely to be changed, and NFRA will be a catalyst to change that ecosystem. Now, coming back to the question that has been framed by Mr. Tiwari, and very well framed questions. So, I will restrict myself to deliberate on those questions only. The first question is, should ethical and independence standards be also a part of CA 2013? I must mention here that whether we talk about the auditing standards, accounting standards, ethical standards, they are benchmarked with global standards. And when they are benchmarked with global standards, they are almost, I will say, clone of the global standard, almost similar to the global standards. There is no difference. Then the question arises, why an independent body should overview or recommend after examining it for approval? The answer is, of course, quite clear, that it is always better that it should be reviewed, not because that there is conflict of interest within the body which adapt and formulate the Indian auditing standards or accounting standards. Because I sit in the accounting standard board of the ICAI, and I see that the kind of deliberation goes on and the various representations there. But still it is important, should be reviewed by an independent body as it is the global practice. My view is that ethical standards should also be brought under the purview of NFRA. But I would like to make a point here that whenever there is an approving authority, whosoever it may be, it looks like that in the hierarchy, the approving authority sits higher than the recommending authority. That means government is hired to NFRA, NFRA is hired to ICAI. But that should not be perceived that way. It is peer-to-peer review. Because the wisdom in IICA is no way lower than the wisdom of NFRA. Wisdom of the government is no way higher than NFRA. So it is a peer-to-peer review if we take that approach, nothing better than that. And I see that NFRA has already taken that approach with regular engagement with the ICAI. So I believe that the law should be amended to bring the ethical standard in the purview of NFRA. However, when we talk about the auditing standards, it is enough ammunition with the NFRA in investigating that auditing standards also talks about ethics and the kind of independence that is being re-examined by the NFRA in certain cases. It is, I will say, totally a different insight that has been brought in, and it is related to the ethical standards. And therefore, whether it is within the law or not, the NFRA can always take a position on implementation of the auditing standards, accounting standards, and ethical standards. But yet it is better that it is brought under the purview of the NFRA. But while I am on that point, I would also like to say that the ICAI, the body of the professional auditors and accountants, issue a number of technical notes and guidance notes. And the professional members of this body also really look at those guidance notes on implementing those standards, because standards are today principle based standards, although there are a large number of examples, etc., are given, but guidance note becomes a guidance note to guide the professional accountants. And therefore, I believe that it is always better if NFRA look into suo motu on those guidance notes and seek clarification from the ICAI and sit together and say that, okay, this requires certain amendments, rather than suddenly coming out with certain interpretation which is not in the guidance note. Because after all, when we talk about accounting today, we talk about the Ind AS, IFRS, etc., the auditing, a judgment is involved. So developing a perspective and then applying the judgment is always there when applying the accounting standards. And when we talk about developing perspective and developing judgment, it differs from one to another. And therefore, I believe the next step should be to bring ethical standards within NFRA and discussion with the ICAI engagement, more engagement about the guidance note which are already available or which will be issued by the ICAI. Although in the law, NFRA recommends, government approves. Or in other words, perhaps I develop the perspective, ICAI recommends, NFRA approves, and then government approves. Now, quite possible, howsoever way you look into it. But as I have said that we are all peers and therefore work together to develop wonderful best accounting standards, auditing standards, and ethical standards that we shall apply in India to improve the audit quality and accounting quality. The second question which is being posed here is challenges remaining in India in terms of legal and institutional requirements for independent audit regulation. For example, more clarity required on what constitutes non-audit services. Again, here NFRA has taken a step ahead and explained what is a kind of residual item in the non-audit services. I will say management services. It is sub judice, the interpretation of NFRA, but it is a great step. But the question is, whatever kind of clarification we try to bring, there will always be a scope for further clarification. And therefore, whether the law should try to build everything is not possible. How it is possible? Otherwise, courts would not have been there, judgment would not have been there, interpretation would not have been there. We say law is there, follow it. We can't follow like that. And therefore, it is important that let us not try to incorporate everything in the law. But when we interpret, then we should also look at what is the legacy system here. For example, when we talk about the auditor of the holding company, what is the responsibility for audit of the subsidiary company? Now, there is SA 600 which very clearly says that you have a responsibility to assess whether you should get engaged, you should not get engaged, how long you should use. SA 600 is there. But many of the auditors will say that the way the report is presented to us, we have accepted it and incorporated the consolidated financial statement. It is legacy. We cannot change this tomorrow or today. We need to wait. We have the patience. And therefore, while imposing penalty, we should also take into consideration that there is a professional practice which has been developed in India for a long number of years. And therefore, if we want to change it, can we say that the penalty should be so severe that nobody will dare to do that? No, that's not the approach. I will request NFRA that when we impose penalty, please don't ignore the legacy which we are carrying in our auditing profession. That will be my request to NFRA, that please don't do that. Don't scare the auditor. You do it, penalize it, signal it that what is practiced by the profession may not be the best practice. You have to change, but give time. It needs to be changed. And therefore, when we talk about non-audit service, in particular the question has been raised, I think what is given there is fine. But should we ban non-audit service altogether? I don't think so. I have seen a consultation paper of NFRA, and where it says that the big four firms, it names big four, but there are not only big four, there are, we can say big 10 firms, somebody will say big 6 firms, they are investing hugely in technology. Now, if they have to finance those investment in technology from audit fees only, in that case, I don't know where the audit fee will touch. And therefore, I am not very sure whether we should ban all the non-audit services. The law presently is good enough to provide or to safeguard against conflict of interest. But there are some countries which says that there is a cap on the amount of non-audit services. That is very important, that we need to consider whether we can impose such kind of a cap that 70% of audit fee can be non-audit services. I am not very sure about that what is the best thing to do. Because when I look at the research papers, then I find no correlation between non-audit service and audit quality. But yes, sometimes we develop the myths, sometimes we develop the impressions, sometimes we go by what is the global practice and we incorporate it. So I am not saying that it is a bad idea to reduce the non-audit services, but I believe that a very strict interpretation might or might not be good. I am not very sure about it. So I don't think that there is any necessary to amend the law as it is being here, but interpretation need to be discussed and deliberated, and I think NFRA can issue a guidance note in advance that what it mean by the non-audit services, because that guidance will be very helpful to across all the professionals, whether they are within NFRA's domain or they are outside the NFRA's domain. That kind of guidance NFRA should produce in form of any kind of document, technical document. I am not saying which kind of technical document, but NFRA should also issue guidance note in advance to say that this is our interpretation of the law. Now that is very important. Then the question arises, any challenges or concerns regarding the present set of statement of auditing, that is auditing standards. Again I say that once it is benchmarked with international auditing standards, and I can tell you that the institute is keeping pace in implementing, incorporating whatever is coming globally, and now it is participating very closely in giving feedback to the exposure draft. So it is getting ready to issue that kind of standard. Then I think we are not lagging behind much. And therefore, I don't see that there is any lack of standard of auditing. But the question here says about accountability of principal and component auditors, which I have already touched. It is the legacy and it is not the good practice. But the question is that it all will involve increasing the audit fees. And I can tell you that it may be a conflict of interest. I don't know what I am saying. I may be biased that audit fee is not that significant, except for the large international firms. And therefore, we should be very careful in saying that whether this cost will go up and who will bear the cost. After all, shareholders will bear the cost, and they are bearing the cost. Now, everything comes into my mind, being a student of corporate governance as well as a student of auditing, that whether independent directors are contributing more or auditor is contributing more in improving the corporate governance. To my mind, auditor is contributing more rather than independent directors. They are not penalized. Auditors are penalized, but auditors are not paid, they are paid. So the question is, it is again a question of ecosystem. Is there a need to change the ecosystem altogether? If it is a need, then NFRA should also contribute in changing that ecosystem. I said that a regulator also influences the ecosystem. Are we influencing the ecosystem? This question needs to be pondered about. Now, if you look at FRC of UK, they issued the Code of Corporate Governance, and that is well accepted across the globe. But now they are being criticized and reviewed. They are saying that FRC has failed. So any institution which will continue over a long period of time will be criticized because there will be a failure and there will be successes also. So reviewal is very good. So this kind of panel discussion periodically will help us to improve NFRA as well as the performance of the accounting bodies. Then practical model for financial independence. Now it is now government grants. But my most important worry about NFRA is again the financial resources. Is it adequate? If you look at PCAOB, the kind of resources they have, those resources are not available to the NFRA. I don't know, perhaps chairperson don't feel like that, but I feel like that. Right? My point is that there is lot more work which NFRA has to do and it is not doing. Right? For example, it can fund research to academic institution, so that because it has to understand what is the market risk, what is going on, to form a view. And it cannot always look at what is happening internationally and implement it. What is important is to understand the Indian corporate sector, Indian ethos, Indian culture, Indian risk of the Indian market, and therefore it should have a research grant to be given to the government. Or it can employ people itself to do a research wing and do the research. And perhaps more staff is required for more investigation. Now here I would like to mention a question that the institute has implemented the peer review system. Now whether suo motu, the NFRA should also look into, here comes the question of whether the firm should be registered with NFRA. If it is registered with NFRA, if we can implement that, in that case it can suo motu look into the peer review system or quality assurance system within the firm. That is also a possibility, but all requires financial resources. So we can have the PCAOB system of charging a levy on the corporate to augment the resources. I am not saying that government should not give the grant. I am saying that let government grant be there, but there must be some kind of augmentation of the financial resources that is available. And I don't see that it will lose independence if it is levying some kind of levy on the corporate sector by whatever name it is. Therefore, this can be an alternative to augment the resources that is available. The third question is given to me is challenges facing the regulator in balancing independence of staff and audit profession and technical competence. Now, therefore, we need to look into what are the alternatives available. After all, competence is required, and therefore, you have to recruit accountants. So, we have two options, get from CAG or get the professional members of the Institute of Chartered Accountants of India. There are only two options available with us because we need experienced people. After all, NFRA is the regulator. The question is, when we talk about commercial audit, perhaps the members of the CA Institute, ICAI, will be much better suited than members of the CAG, except the commercial wing of the CAG, Directorate of Commercial Audit, which audit the PSUs. Question arises, does it conflict with the interest of the NFRA? Is there a question of independence? I draw a parallel from the from the court, from the legal system, right? Indian judicial system, or so far globally, is considered to be independent, but they recruit lawyers as judges. Is there a conflict of interest? The answer is we don't question, right? We say that judges are unbiased, judges give very fair judgment, and still they recruit the lawyers. So why should we worry so much about independence while recruiting the members of the profession? After all, from my BCom studies I have reading, independence is a state of mind. And if independence is a state of mind, let us not too much worry about independence while recruiting professionals who are members of the Institute of Chartered Accountants of India. Yes, if you find that there is a lack of independence of any one of your staff, zero tolerance. And if you follow that, I don't think that there is any problem. But independence from government is important, which is not there, because it is under the Ministry of Corporate Affairs. This should, NFRA, should report to the Parliament. After all, we know that industry lobby with government, and therefore government may create pressure. I am not saying that it is creating pressure. I am saying chances are government might create pressure on the NFRA to keep blind eyes on something. So it should not only be independent from the ICAI, it should also be independent from the government. Therefore, I propose that there should be a separate act for NFRA, and that act should permit it to report to the Parliament. Of course, there can be administrative control of the MCA, but not direct control of MCA. Now, these are some issues which are so important for us, although it may look like that they are not very important issues, but these are the basic issues that need to be addressed if we want to strengthen the NFRA. And that is the way forward for NFRA. It should have a separate act, not section 132 only. The act should make it a very independent body like Election Commission, and of course, Election Commission is whether biased or not, there is a lot of debate in media. We should not get into that. Right? But still we can say that such institutions are unbiased, right? Therefore, NFRA should also be like that kind of institution, reporting to Parliament, independent of the government, independent of the profession. That is the future of NFRA. So law need to be amended, separate law to be created, ethical standards should be brought into the purview of the NFRA, and NFRA should engage with the Institute of Chartered Accountants of India like peer-to-peer discussion, not like a supervisor to subordinate discussion. With that, these are only some views which I could provide in this forum, and thank you very much for giving me the opportunity.
Thank you, Professor Bhattacharya, for dwelling on the issues that we provided you in a very forthright, in a very, interesting manner. And I'm sure the points that you brought out are going to inform our thinking in a very profound manner in the times to come. So thank you very much. Your years of experience and wisdom was clearly visible throughout your presentation. I have no words to thank you. With that, we move on to panelists 2, Mr. Ramesh. And can we have that thing on the screen, the issues that are framed for Mr. Ramesh? So I'll quickly run through the issues. Number one, what should be NAFRA's approach to develop a risk-based recurring inspection system? Number two, criteria to differentiate between audit quality inspections / reviews and audit investigations. Number three, challenges in ensuring compliance with some standards on auditing, for example, engagement, quality control reviewer. Number two, audit work paper, resources, constraints versus mindset culture. Then the fourth issue that we have for Mr. Ramesh is, in case of large firms, how to adopt the firm-wide and individual audit file reviews at the same time. The fifth issue is rules requirement to publish audit quality reviews. And the sixth one is recommendations for systemic improvements in audit quality. The seventh, the last issue for Mr. Ramesh, is audit rotation and joint audit have they delivered desired results. So on to Mr. Ramesh. Thank you very much.
Chairman NFRA, Mr. Tiwari, Ma'am Jingran, my fellow panelists, Ashish Bhattacharya, ladies and gentlemen, good afternoon. Thank you very much for this opportunity. It is great to reflect back on these questions, and particularly in the context of operational requirements of NFRA. Let me set this in context. Mr. Ashish Bhattacharya made a lot of very, very valid points. I may have a contrarian view or an additional view on one or two of them. I'll touch upon them if you don't mind. But fundamentally, we are talking about two obligations of NFRA which are there under the Companies Act. The first is enforcing compliance with auditing standards, accounting and auditing standards. And the second is an oversight on the quality of the profession, or enhancing the quality of the profession, whichever way you could, it has a deeper meaning there. All of what NFRA does, apart from the disciplinary mechanism, which I will not get into, what we are going to talk about today in this my 15 minutes is on the operational requirements, addressing these broad two questions. When NFRA was activated in 2018, unfortunately it was born out of a crisis, and its first task was to deal with some of the largest corporate failures which suddenly happened. Typically, a regulator, when it is born, I do concede that PCAOB was born out of Enron failure and all of it, but then typically you are not expected when you are born to run. And here you are expected to do the last part of it, which is running, and therefore it started off with almost investigation being the first task, whereas inspections should have been mechanism to build inspections, ultimately leading to investigations in case there are repeated failures, despite multiple inspections and multiple findings. You've also heard the Japanese regulator today, and I don't again agree with what they have done, because he in a way summarized saying there are so many failures of small firms, therefore you need to look at small firms. This contradicts the very grain of risk-based inspection which we have to deal with. Ideally, a regulator should set expectations first, because a regulator, implicit in a regulatory function, is a developmental function. You are obliged to develop your constituency whilst regulating your constituency. I do recognize that time is short for a regulator. Inspections have to begin, and you have to at the same time set expectations. And he raised one issue on setting expectations on scope of services, which is what constitutes management services, and it is absolutely important to set expectations. Where I have a view with Mr. Bhattacharya is saying, yes, independence is not impaired by non-audit services. Sure, perhaps that's a view. I have always held that view, but that's not the global view today. The global view is on the basis, if I may use a Zulu proverb, which says a dog with a bone in its mouth cannot bark. So effectively, it means that you have other services, you will not be able to bark, and which is your role as an auditor. So increasingly the world is moving towards that, saying, all right, may be independent, may not be independent, why do we need to get into that? Auditor should not provide other services to his audit client. He can provide other services to any number of other clients. And if he has a market share of 10%, 90% of the market he can provide other services. Nobody stops him from doing so. So where is the debate? That is one. Then the second issue which he made, and being an independent director now I realize, I've been an auditor for 40 years plus, he said auditors are being punished, independent directors should be punished more. No, I'm putting words into your mouth, but let me explain perhaps why auditors are more on focus than independent directors. Auditors are on focus because who is inside a company for a longer period? Auditors. Who has access to books? Auditors. Who has a team of 10, 15, 100 people into doing the audit? Auditors. Independent director is at a board meeting looking at PowerPoint presentations, max 50 to 75 hours in a year. You expect miracles out of him? So who should be punished in that case?
Both.
Both, but in terms of, who has had the opportunity to observe, find, as opposed to somebody who has had lesser opportunity, there is to be that parity. That is the only point I would like to rest my case. Let me go on to the questions. The first question is on risk-based inspection system. Here again, it's a long answer. I don't want to give a long answer. Chairman NFRA did give statistics, 6,000 plus 820 companies which are covered, etc., etc. Fine. That's a huge population. And a large part of that population are, I would say, broadly from a public interest perspective, though they may be listed, they are not public interest given their size and whole host of it. The first step in any risk-based inspection mechanism is stratification of the population. The risk there are two types of risks which arise. There is what is called a risk of auditors, and there is the risk of audit engagements. When you're looking at risk of audit engagements, your risk-based supervision must cover all significant public interest engagements, and therefore the stratification would be, by just a suggestion, a Nifty 50 or Sensex 30 or the top 100 companies in a period of 2 years should have had some form of inspection by NFRA, the audits of those, or net worth greater than 1,000 crores. Something which is net worth between 500 and 1000 crores may be listed. They are not as much public interest as these, should perhaps once in 3 years at least. And the others over a period of 5 or 7 years, but still there could be a number of companies which audits of which may not have been inspected. Doesn't matter, because it's not public interest. But the FIRE principle which one uses is frequency, interval, risk and exposure. Your frequency of inspection, your interval between two inspections depends on the risk and exposure. What is risk and what is exposure? If a large entity fails, there is a significant risk and of course a significant exposure, but a significant systemic risk. If a smaller entity fails, the risk is less, but exposure could be some bit. There could be some level of borrowings. So when you stratify, you have to remember this FIRE principle. This is insofar as entities. As an audit firm, again, audit firms vary in sizes. Typically, the risk of a large firm failing or not doing its duty is of more concern than a risk of a smaller firm. So a larger firm, say 50 to 100, greater than 50 partners, should at least be inspected once in 2 years. Now, inspection has two parts. There is a quality control of firm-wide. There is engagement review, file engagement reviews. Now, that quality control, which is firm-wide, should be at least once in 2 years for a large firm, ideally once in a year. When I say large, maybe more than 50 partners. 20 to 50 maybe once in 2 years or once in 3, and the rest once in 5 years on an overall engagement quality review. When you combine both of these, it should ensure that you have covered all significant auditors and you have all covered all significant audits. This is how a risk-based inspection program you can drop. I don't have data to be able to give more answers on this, but I'm sure you can work out models based on this. Of course, this will be calibrated based on the resources. The second question, which is very interesting, how should we differentiate between inspection and investigation? This is the core. This will determine whether you will achieve the target of 800 set by the chairman, or you will achieve only 8. If every inspection is undertaken as an investigation, you will never reach 800. Typically, worldwide, an inspection is broadly proceeds with a mindset that everything will be all right, is all right. Let's see whether it's more confirmation of a positive view, and then looking to picking up selected areas, typically could be revenue, could be cash and bank, any of the significant areas of that entity being audited, and looking at to see whether an auditor has done adequate work, gathered sufficient appropriate audit evidence for him to form an opinion. It's not looking at the whole file. It is not saying you send your file, I'll take 6 months to do it whenever I have time, and I'll come up with a report. That is not the way it is done. It is very focused, picked up over a period of, because you can't as an inspector spend more time than what an auditor has spent on the audit. That is fundamental, right? So therefore, typically an inspection does not take more than a week or 2 weeks, because it's a quick review of a file on a very overall basis. Investigation is far more intense. It is like the difference between auditing and forensic auditing. There's a huge difference between the two. I'd stop here for that and move on to the third question, which is on challenges in compliance with engagement quality control reviewer and audit work paper resource constraints, which is mindset. This whole engagement quality control reviewer is not a challenge. It is a challenge for firms which are small, because if there are only 2 people, 2 partners, one is a tax partner, one is an audit partner, who will review whose work? The tax partner is not competent to do an engagement quality control review. In such situations, it is important to outsource the review to another firm saying, can you help us review this? We need collaboration and alliances there to be able to undertake that. In larger firms, the challenge is different. Everybody is doing an audit. Will he find time to do a role of an EQCR is the issue, but I think they've been able to navigate that by saying, these 6 months you're not doing audits, you're only doing engagement quality control review or dedicated personnel. But the second one is more important, work paper document, resource constraints, which is mindset culture. There can be no compromise on this. Documentation is the core because that is what tells you the story of what an auditor did, why he did, what did he find, and how did he conclude. If you are going to compromise on that core, how will any inspection happen? So that there's issue, if there is an issue of mindset that needs to be corrected, but ideally what will happen, what needs to happen in my view, we need a model file to be developed by industry so that small and medium firms and others can be shown this is the model file. Try and model yourself on these, and if that has the blessing of NFRA, then it's easier. You have some model of work papers as opposed to a theory in the auditing standard which says this is an essay standard of auditing which deals with work paper, which is broadly principle based. Let me go on to the fourth question. In case of large firms, how do we adopt firm-wide and individual file reviews at the same time? This is very easy. Because when you go to a firm, you're looking at overall quality control processes, and you do that only once. And if you're doing a review of a firm once in 2 years, you do that only once, because just next time to see that the processes still remain the same. But file reviews depends on the number of audits a firm has. So when you visit a firm or when you pick up a firm for audit, for review, you do one quality control review of the processes. You may pick up 5 audits or 10 audits of the firm and look at their 10 audit files. So I don't think there is a challenge there. And that's how global reviewers do when they visit. When they visit India, they pick up one firm, they take up one quality control review and take up 5 engagements. Let me go on to the fifth question. Is there this issue of publication of AQR? I have a personal view here. All of these, of course, are personal views. I'm sorry I should have said that at the upfront. But I have a passionate view here. And that is, AQRs should not be published. AQR is if you're talking, I'm loosely using AQR in the context of an inspection report. If you're inspecting, you don't publish. If you're investigating and coming up with an order, then you publish the order. RBI does an inspection of a bank, it doesn't publish the report. SEBI does inspection of brokerage firms, so many. They don't publish reports. But when they issue show cause notices, then have a hearing and then issue an order, that is an order of punishment, yes, that is published. So we need to have inspections segregated from enforcement. Enforcement actions and their consequence should be published, not every inspection. In fact, it is not unusual for inspections to come up with a clean chit and say, because it's an umbrella inspection, to say we haven't found anything, or they normally don't communicate they haven't found anything, they just keep quiet. If they found something, they give you an opportunity to remediate and come back after a period and say, to check whether you have actually incorporated those suggestions, and even if thereafter it is not, then there is a public revelation of the failure. The sixth question, this requires several days. This is in the context of audit quality, what can NFRA do about systemic improvements? Audit quality is influenced by 3 factors: input factors, output factors, and what we call context factors or other factors, and I'll quickly explain. Input factors is all what goes into an audit. The resources, the time spent, the methodology used, the sampling methodology, the tools which the auditor uses, how an auditor finds, what does an auditor do. Output factors is what the auditor reports, reporting to those charged with governance, and the audit report, etc., the public reports. Contextual factors are the standards under which the auditor operates, the audit committee, the board, quality, the entire environment also contributes to audit quality. Now, what has happened is over the years, audit has moved from what I would call an thinking audit to an inking audit. Because of, PCAOB and every other regulator coming in, and now NFRA in India, and I've just spoken about documentation. There's document. So the first thing an auditor does is try and corrects his documentation. He has no time to think. He's lost his power of thinking. So I'm worried that an auditor is not just blind. Auditor is supposed to hear. He's not only become deaf, but he's also becoming blind is the worry. We need to push the pendulum back to a thinking audit. And that is where I believe we need to get into that core of audit as to how an auditor carries out his process, what judgments he exercises. If you really look at an audit report today, you can't make out anything. It's a template-driven report. If a person does not do an audit, he can write the same report. If a person does an audit, he can write the same report. From the outside in, you can't make out. I personally believe sunshine is the best disinfectant. Therefore, bring out more information into the audit report. How much time did he spend? What are the resources he used? What are the sampling methodology? Either to the audit committee or to the public or whatever it is, so that we have a speaking report. We don't have a template-driven report. Perhaps like in the banks, a long-form report which is filed with a regulator is another option which can be examined. Like you have a tax audit report in income tax, etc., which is far more detailed with questions to be answered. So I believe as far as audit quality is concerned, a lot needs to be done as in all of these three factors, which is a completely different subject. The last before I close is what are my views on audit rotation and joint audit? Have they served? What are the results, etc.? Audit rotation and joint audit address two different risks. You can't combine the two. Audit rotation addresses the risk of misplaced confidence. That means too long an association with a client, you are blinded by the fact, I trust Mr. Bhattacharya, I know him for the last 30 years. That is that misplaced confidence. So your ability to exercise skepticism, professional skepticism, is impaired. And that is why this principle of audit rotation was being introduced. But unfortunately, that's also being introduced to deal with the issue of audit concentration, which is not the issue, not to be done, for which solutions are different. The second one is joint audit, is to address the issue of audit quality on the principle that two pairs of eyes are better than one pair of eyes. Like we say the proverb, two heads are better than one. But there's also a proverb, too many cooks spoil the broth. Unfortunately, in India, we have taken it to the other extreme. We have 4 joint auditors, 8 joint auditors, 12 joint auditors in some situations. If I were to extend that principle, the world's largest company should have at least 100 joint auditors or more. So divided responsibility will result in divided accountability. We need to, address this issue of joint audits and say, is joint audit enhancing quality? There is no empirical evidence on both rotation and joint audits to address this issue of audit quality or prove that it has enhanced audit quality worldwide. Again, as I said, unfortunately, joint audit is used as one mechanism. In some parts of the world, it's being considered again to see that audit concentration can be addressed. But in my view, it is the wrong medicine for the ailment. It's a completely different medicine which we require for audit concentration, not joint audits. And definitely, it may not necessarily enhance audit quality the more the auditors you have doing this one single audit. And the last point on that is when you inspect, if an audit is a joint audit, please ensure you inspect both auditors at the same time, both audit firms at the same time. Not one half of the audit is inspected today, maybe 1 year later by cycle the other auditor is picked up and you're looking at you may or may not look at the other half. That won't work. You're looking at that entity also, audit of the entity being inspected in addition to the audit of the firm. Thank you very much, ladies and gentlemen.
Thank you, Mr. Ramesh, for your very definitive, authoritative, and in most cases, very convincing views on the items that we presented to you for. I'm sure we take back all your thoughts and ideas for a more intense Amrit Manthan in the times to follow. With that, ladies and gentlemen, we come to the conclusion. We have 5 minutes for question and answer, not more than that. Please raise your hand, and then also, and oh, there are more than, no, we cannot give more than 5 minutes, so please, 3 questions, not more than that.
Yes, sir.
When you ask the question, also point out which panelists you want it to answer. Thank you.
Thank you, sir. Thank you. High quality financial reporting framework through effective independent oversight. Okay. Sir has already said that this is an iconic event. In next 25 years, we are drawing the course of action for NFRA. To me, I am not an auditor, not in the profession. We misinterpreted, with my understanding, that we can measure the quality of audit by standards. That is wrong. Standards are not meant for the quality. They are meant for compliance. And therefore, our interpretation is wrong. I think we should have done enough work to improve the quality of audit by understanding the word quality itself. Standards are very objective, common for all.
Could you please ask a question?
But the question is simple, because until less will not focus on quality, because quality is very subjective. Quality is not objective. There cannot be standard for quality. But we are measuring quality of audit by standards. So this is one question. I mean, the panelist will speak on this. Independence, independent auditor, independent audit. There is nothing like independent. That is again very subjective. What are the criteria that is going to be developed by NFRA with reference to quality or independence of a person, so that we can achieve this, and not only quality but high quality. So if you are not sure about quality, what to talk about high quality? That is these are the real issues, and until less we...
Okay, thank you. I think we should pass it on to the panelist. Yeah, Mr. Ramesh.
Yeah, yes, quality is subjective in everything. As Peter Drucker said, quality in a product or thing is not how difficult it is to make or how much effort it has gone into make that thing. It is what the customer gets out of it and what he is willing to pay for it. So at the end of the day, quality of an audit is judged by what the user gets out of it in terms of whether his financial statements are free of material error or not. You may disagree with me on that. It is not compliance with auditing standards. Now there is a debate again which is happening across the world, is what is the purpose of audit, and that is why, because of this whole issue of audit quality. But clearly it is, whilst I talked of input factors, output factors and context factors, all of these enhance audit quality without doubt. The second point on independence, you are 100% right. Independence is a state of mind. Independence cannot be determined purely by regulations. Having said that, the reason why there is so much focus on independence is, it's like Caesar's wife. You have to be seen to be pure in addition to being pure. And therefore the rules are being framed to ensure that you are not only independent, but you're seen to be independent, so that otherwise the very perception of audit quality is eroded because, oh, after all, this person is a family person. If you don't prohibit you having shares, if you don't prohibit you being related to the directors, etc., then the perception of quality is enhanced through that prohibition. That's all.
Thank you. One question. Yes, sir. My question is one question from this side. Please be very brief.
My question is to PR Ramesh. He just commented on the smaller firms need to outsource for review purposes. So in South Africa, there is a requirement in Johannesburg Stock Exchange that every audit firm which audits listed companies should have one IFRS advisor, and that IFRS advisor has to review those financial statements and submit their reports to JSE. So whether that sort of a requirement can come in India also?
No, I'm not in favor of regulation here as much to say that firms should find their own mechanisms to comply with the standard. If you don't have adequate partners, use other firms on a mutual basis.
Yes. Yeah, thank you. My name is KP Sundriya and I am from ASA and Associates. My question is from Mr. Ashish that if you see as per section 144 of the Companies Act, so there are certain services, they are written that certain services which auditor cannot provide. I think there should be services, there should be mentioned that there should be some certain services that auditor can provide. I think that will give better way to govern independence.
I think the way it is written there in the law, that is what we see generally globally. That is the language in which that is the language in which we see globally the law is written. That is number one. Because when we say that this is the services which can be provided, then the list cannot be exhaustive. Therefore, the services which cannot be provided is the better way to say that these services interfere with the independence. That is number one. Secondly, law also says that whatever other service you can provide, not listed there, that has to be provided with the approval of the audit committee. In our deliberation here, we have not brought in the concept of audit committee and corporate governance, but that is another institution which brings and improves quality of audit and quality of corporate financial reporting. So we have limited our discussion with NFRA, but we have to discuss across all institutions to see what role every institution has to play. So I think the way the law is written, I am in favor of that.
So thank you, Professor Bhattacharya. With that, we bring this panel discussion to a close. Let's join in giving a big hand to Professor Bhattacharya and Mr. Ramesh. Thank you very much.
Thank you, sirs. On the behalf of all the viewers, I extend my sincere gratitude to the panelists and the moderator for the stimulating discussion and for addressing the questions of the participants. I also thank the viewers who have asked the questions. I would now request moderator Shri Praveen Kumar Tiwari ji to present the mementos to the panelists. Thank you, sir. Ladies and gentlemen, we have now come to the last session of the day, which is a panel discussion on enhancing financial reporting quality, role of independent oversight bodies. Ms. Himani Agrawal, Assistant Manager, NFRA, will be making the short presentation explaining the topic. Srimati Smita Jingranji, Member, NFRA, will be moderating the discussion. Senior Chartered Accountant MP Vijay Kumar ji and Senior Cost Accountant Dr. Avinash Chandra ji are the panelists. Now, without further ado, I would hand over the stage to Ms. Himani Agrawal for the presentation. Thank you.
Thank you, Swati ji. Good evening, everyone. I welcome you all to the session on role of independent oversight bodies in enhancing the financial reporting quality. So, starting with a bird's eye view of the major jurisdictions, we can see on the screen a list of 10 jurisdictions, including India, and see that these are the jurisdictions which have instituted independent bodies for setting of accounting standards and also for monitoring the compliance of those standards by the preparers of financial statements. What may also be noted from the slide is the uniqueness of India's standard setting scenario, where the proposed accounting standards are first recommended by the Institute of Chartered Accountants of India, which are then deliberated in the full board of NFRA. And then together we, NFRA and ICI, recommend these standards to the central government, which then goes on to notify them. Now, let us have a quick understanding about the regulatory regime of some of the countries. So what we call in India as financial reporting quality review is known by different names in different countries. For instance, in UK, it is known by the name Corporate Reporting Review. In Australia and Singapore, it is known as Financial Reporting Surveillance Program. And what is peculiar about these bodies is the fact that they highlight the focus areas for the forthcoming review period in advance. That is, they indicate the market the priority areas that they will be focusing upon. And thereafter, a review process similar to what we have in India is followed, where the financial statements of select entities are examined. It is seen whether there is any apparent departure from the accounting standards, and where it is found the preparers of the financial statements are inquired about them. And if it is concluded that there is some non-compliance, then necessary action ranging from minor modifications to complete restatement of the financial statements is undertaken. So with this brief understanding about the international scenario, let us now move towards the Indian one. And for this, I would like to refer to the speech of Chairperson NFRA today, wherein he referred to the entities which are covered under the domain of NFRA, which include all the listed companies, unlisted public companies which have their borrowings or share capital or turnover of or above a certain specified monetary threshold, and some other entities together which are known as public interest entities. And with respect to these entities, the NFRA has the role of making recommendations in relation to financial accounting standards, as I also referred in an earlier slide. The Companies Act 2013 also gives NFRA the responsibility of monitoring and enforcing the compliance with these accounting standards and overseeing the quality of compliance by the professions with respect to them. It also gives NFRA the power of investigation on suo motu or on reference made to it by central government. So following these responsibilities and also based on the review of reports issued by other independent oversight bodies, as can be seen on the screen also, it was noted that both nationally and internationally, the nature of non-compliances has been in almost similar areas, ranging from revenue recognition, impairment assessment, fair value measurement, management judgments, and so on. So with this brief understanding about the topic, I would now like to request moderator Ms. Smita Madam to take the panel discussion forward. Madam.
Thank you, Hemani. Good evening, ladies and gentlemen. It's a pleasure for me to chair this session and moderate it. Before I go on to introduce our eminent panelists today, I'll just take a couple of minutes to talk about two ideas that came to my mind. Of course, the topic is flashing on the screen, and you know what is the topic today for discussion. It's the quality of financial reporting and the role of the independent oversight regulator. There are two important trends in business and finance today, which actually mandate the requirement to have an independent audit, a regulator, and have standards followed by all entities in accounting standards. First is there is an increase in cross-border mergers and business combinations, which often leads to conglomerate enterprise and creation of multinationals. Now, when the target, in whichever nation it may be, if the target is following accounting standards which are accepted worldwide and there is an oversight regulator in that country, it makes such combinations much easier, or if I may say that it facilitates such combinations. We in India, the government has been following a policy of Invest India, Make in India, and trying to encourage a lot of FDI. So this entire ecosystem of having good accounting standards being followed by our enterprises would of course promote these objectives of the government. The second important thing that I would like to talk about is the India's financialization. As the story of India's financialization unfolds, what we see is a huge family of investors who are entering not only the financial markets but equity markets. And these investors need to make certain informed decisions. And the basis for such informed decisions would be good accounting practices. They would look at what is put out in the public domain in terms of the accounting standards and the fact that what does the regulator point out about these companies. So definitely when it comes to investment, whether it's internal investment within the country or investment coming from outside, whether it's business combinations, the need for the high quality reporting standards and an audit regulator and an accountancy regulator need not be highlighted. I mean, that need is something which is a felt need. So within India, we have adopted the INDES, and it has been rolled out from 2015-16. So we have 41 INDESs with 9 carve-outs, and this applies to the PIEs that Himani just spoke of. For the non-PIEs, we have the ASs. The INDES and the AS together form what is the framework of the accounting standards in India. This panel will now go on to discuss how we can enhance this quality. And now I take this opportunity to introduce our eminent panelists. First, we have Dr. Avinash Chandra, and he is an advisor to the Government Accounting Standards Advisory Board, which is the GASAB, G-A-S-A-B. And he is also Director XBRL India. He is a special invitee on the Accounting Standards Board, Expert Advisory Committee, and Committee on Public Finance and Government Financial Management of the ICAI. He represented India for about 15 years at the International Accounting Standards Board, and he's also represented India for 15 years in the National Accounting Standards Setters meetings. He's a technical director and secretary at the Accounting Standard Boards of the ICAI. Welcome, Dr. Avinash Chandra. Our next eminent panelist is Mr. M.P. Vijay Kumar. He is a member of the IFRS Interpretations Committee of the IASB. In fact, he is India's face in various committees of the IFRS Foundation. He is a member of the IFRS Advisory Council. At London, he is a member of the IFRS Foundation's SME Implementation Group. He is an ex officio member of NFRA 19 to 22. He was a council member of the ICAI, chairman of the Accounts Standard Setting Board, and an active member of the Confederation of Indian Industry. So a warm welcome to you, Mr. Vijay Kumar.
Thank you.
So as we move on to pose questions to them, I'm going to point out which panelist I'm going to address the question. I'll start with you, Dr. Avinash Chandra. As we just said that we have adopted the INDES, and these are based on the IFRS, but we have 9 carve-outs. Do you think the time has come for us to actually have a relook at these carve-outs?
Thank you very much. I take this opportunity at the outset to thank NFRA for inviting me to share my views on various important topics related to Ind AS. And I have been a part of the journey towards implementation of Ind AS in India. And this gives me an opportunity to not only to look forward, but also at the same time to look back. Actually, in 2011, when the process for implementation of Ind AS was started, at that point of time, there were a lot of apprehensions, and those apprehensions continued till 2015 when the Ind AS were actually implemented. The apprehensions stemmed from the perception that the IFRSs are somewhere here and our accounting standards are somewhere here. There is a lot of gap. So that was one of the major reasons for these carve-outs. So therefore, the point is that having implemented the Ind AS for a certain period of time, which is about 6 years, is it a good time to look forward as to whether we can do away with carve-outs, if not all, at least some of the carve-outs? So, as far as I am concerned personally, I would not like to have any carve-out, personally. The reason being that why did we go for the IFRS in the first instance? We wanted international comparability of financial statements so that the international investors who want to invest in India, in Indian companies, they have the same benchmark financial statements which are IFRS based, followed in more than 140 countries. So therefore, that was the intention. So if the financial statements have to be comparable worldwide, they should speak the same language. So that is where the need for IFRS-based Ind AS came from. So initially, therefore, if there were some apprehensions, to address those apprehensions, these carve-outs were thought of. And why I don't want carve-outs, I would like to mention another thing, that insofar as economic transactions are concerned, they are the same worldwide. Unless, the economic transaction is based on some legal requirements. For example, if there is a gain on purchase of a business, which is called as a bargain purchase gain, that is, you have paid less to acquire a business, then that gain, the treatment of that gain should be similar in Korea, should be similar in England, should be similar in India, should be similar in China. But we have a carve-out that we do not take that gain in profit and loss account. We take it to reserves through OCI or directly. OCI, what I mean to say OCI, maybe I am talking too technically. It is through other comprehensive income. What I want to highlight is that there is no need for such a carve-out because the nature of the transaction is the same. So having said that, I would like to mention that if as a country we have to follow the IFRS, then if we have some concerns, then how to address those concerns? do we have to follow the carve-out route, or is there any other alternative which is available to us? My answer would be that there is one route available, and that route is engage with IASB. And engaging with IASB, what I mean to say is that we talk to IASB wherever we have concerns. And through my personal experience, I can state that the IASB listens when we put forth our researched views to them that these things are causing problem. IAS 41 agriculture is an example, because the IASB revised that accounting standard, IAS 41, on the representations made by India as well as some other countries like Malaysia. So that revision was made in IAS 41. And currently also, for example, we have a carve-out in IAS 32 on account of providing exception in the definition of financial liability with regard to foreign currency convertible bonds. Now, that carve-out we have discussed in past with the IASB, and they are willing to listen. They understand the problem, and they are willing to address the problem at their end, that is by amending their standard. And right now they are looking at IAS 32 revision under the what is called as the FICE project, which is the financial instruments of the characteristics of equity. So what I mean to say is that if we have an issue in a particular standard, we can engage with the IASB to deal, to revise their standards. That of course requires a lot of, convincing. It requires a lot of convincing. Mr. Chopra is there. He knows that how much we talk to IASB on agriculture. Now, with regard to the remaining carve-outs, that is, the question arises that where the IASB does not agree, then what to do? I mean, the IFRS, they are finalized after consultation all over the world. And therefore, it is possible that some of the concern which we have, they may not be addressed through revisions in the international financial reporting standards. So in those situations, my view would be that we should revise our Ind AS, we should amend our Ind AS after, preparing the various stakeholders like the industry, that, whatever implications they are likely to face over a period of time. And what I can say with confidence is that after having implemented these Ind AS over a period of 6 years, many of the apprehensions have been removed. And secondly, the institute is revising the current accounting standards to bring them nearer to the Ind AS. So therefore, going forward, once these new upgraded accounting standards are implemented, which may happen, say, a couple of years down the line, thereafter, the transition apprehensions may not continue. So therefore, my suggestion would be that there is a time to look back on the road and have a roadmap for the removal of these carve-outs. And the roadmap can be, for instance, for a period of 3 to 5 years, or it may even be linked with the upgraded accounting standard, which the institute is bringing out, so as to ease the pain for the companies which are coming up.
So 3 to 5 years to basically phase out the standards, that's what you're saying.
So
carve out, sorry.
The last thing I would like to mention.
Sorry. Please.
The last thing which I would like to mention about carve-out is that we are looking at the 9 carve-outs. In my view, there are more than 9 carve-outs. I will just spell out the couple of instances. The first, these carve-out arise from three sources. One is, the legal and regulatory interventions which take place, which provide, departures not only from the IFRS but from Ind AS also. One recent example has been a clarification which has been issued by the Ministry of Corporate Affairs in relation to, what is that the appointed date is the effective date for the purpose of business combinations under Ind AS 103. Now the acquisition date is the date on which the control of the business is transferred to the acquiring entity. Now the appointed date which is mentioned in the scheme may not be the date on which the control is transferred. So through that clarification, of course it has emanated from the Companies Act itself. Through that clarification, there is an apprehension that the business combination, the date of business combination may be different from the date which is mentioned in the Companies Act. The second source is the schemes, the court schemes. Earlier they were mentioned as the court schemes. Now the tribunal is sanctioning those court schemes. The court schemes allow departures from the standards, in past from the accounting standards and currently from the Indian accounting standards. There has been a company, listed company, very nifty 50 companies, which have transferred more than 30,000 crores from reserves to the profit and loss account through a court scheme. Now that kind of a departure, it is a departure from Ind AS also. So therefore it is a departure from IFRS also. So there are numerous examples. I am just highlighting few examples for the sake of time. The third situation is with regard to the IFRS interpretations, because right now the IFRS interpretations, these are considered to be mandatory under the IASB due process handbook. So internationally, the IFRIC interpretations, they are supposed to be followed in the formulation, in the preparation of the financial statements. Right now, presently in India, we don't have a framework through which we can incorporate these IFRS interpretations as a part of the Ind AS framework. So therefore, there is a possibility that there could be some carve-outs which arise from that. So there, I can say a lot with a number of examples, but in the interest of time, I would only say that the time is ripe enough to do a review. Thank you.
Thank you. So I know we had to actually cut you a bit on this because I have a lot of questions slated and I think the audience would benefit from that. Mr. Vijay Kumar, would you like to add on this?
Okay, since Dr. Avinash gave such a elaborate observation on the first query, let me keep my response fairly simple. First and foremost, when we decided on implementing the Ind AS, we had a particular roadmap which included implementing across all public interest entities, and banks and insurance companies are sort of the real public interest entities. And for them, we have not yet implemented Ind AS. And until we implement it for the banks and insurance companies and get through that experience, I don't think we should attempt a review of carve-outs at this stage. So I would prefer that an exercise of review should be taken up after the banks and insurance companies Ind AS is implemented, give a couple of years thereafter and then do it. Second is, as far as carve-outs are concerned, there are some carve-outs which will eventually get phased out, like what Dr. Avinash mentioned on the Ind AS 32 or IAS 32, hopefully when that project gets finalized. But there are some carve-outs which are transition-related carve-outs. I think those carve-outs have been well thought through by various stakeholders at the time when Ind AS was implemented. The then NACAS chairman is present here, and we all know that a lot of deliberations have gone in at that point in time. Those carve-outs removal will require substantial amount of debate. But one idea I would like all stakeholders to think through is, there are many of the companies who have moved to Ind AS who have not availed the optional exemptions which were there in 101. There are many companies, many large companies as well. And similarly, there are many new companies who are now getting formed, for whom those transitional exemptions in any case were not applicable. So we need to see if there is a way in which these companies who are actually following everything which is there in IFRS can still find a way of asserting compliance with IFRS. We need to look at it. The other observation which I'd like to mention is, as far as the carve-outs are concerned, what is very important is the last point which Dr. Avinash mentioned is a consistent application of the standards. I think between all the stakeholders, including the Institute of Chartered Accountants of India, NFRA, MCA, all of us, and NCLT, taking into confidence NCLT, how do we consistently apply the standards? Particularly, it was very disturbing to observe in the context of Ind AS, court-approved scheme of recognizing in P&L. That's completely avoidable situation, completely avoidable situation. Those kind of situations need to be avoided. I think if these precautions are taken care of, maybe after 4-5 years, once banks and insurance companies come onto the Ind AS framework, we can all spend time on reviewing the carve-outs and take a decision forward.
Thank you, Mr. Vijay Kumar. I'll address the next question also to you. You see, in India, we follow both the consolidated financial statements and we have the standalone statements, more so because for the subsidiaries or for the tax purposes. But all over the world, whether it's the US GAAP or the IFRS, they actually go by the CFS. So do you think that there are any challenges in applying the Ind AS to the SFS, and should we move away from this framework of having both?
I think this question probably would have been relevant way back in 2010, 2011, 2012, when the decision of implementing Ind AS was taken. But I think as a country, we have decided to apply the same framework for both standalone and consolidated financial statements. I think having taken that step of improved quality, even for standalone financial statements, I don't think we should revisit that. On a personal note, and this is completely on a personal note, if there is one opportunity for all of us to revisit, it is applying Ind AS to non-public interest entities, that is other than listed companies. In fact, globally they are applied for listed companies, banks and insurance companies. In India, we have chosen to apply it for unlisted companies as small as $33 million of net worth. $33 million is chicken feed in this context. So for such entities, applying such a big framework would be pretty difficult. But I think India Incorporate, I think we should give credit to corporate India that they have actually embraced such high quality financial reporting standards. Nowhere in the world they are doing it, but India has done it. I think these are some very positives which we have to take forward and communicate to the world at large, that India is not a laggard in terms of quality of financial reporting. We're actually ahead of the rest of the world. So hats off to the wisdom at that point in time. That's my 2 cents on this.
So moving on to the next question, which actually I want to address to both the panelists. What we observe is that in India, as I said earlier, the Ind AS are based on the comprehensive IFRS. But in whether we go to US GAAP or even the other IFRS, we find that especially in the US GAAP, there are special separate specific standards for certain industries. For example, the oil extraction companies. in India, do you think that we should also, for the sake of completeness, go into such a framework where we have special advice for or special standards for special functional areas?
Yes. Can I take it first? Yeah. Okay. So as far as my view is concerned, in India we already have something similar, but I would not like to venture, I'd reiterate, I would not like to venture them to call them as industry-specific standards. They're basically activity-specific standards. So if you are in the activity of extraction of oil, so how do you account for that? Similarly, if you have insurance contracts, how do you account for that? Given the fact that these activities have some unique features. So there is a guidance. But all of this guidance is again based on the same conceptual framework, and there are no exceptions which are created there. I do agree that unlike insurance where we have a complete standard now, we had an interim standard which has now become a complete standard. On oil, we currently have an interim standard in Ind AS or IFRS, and there is work happening to make it a complete standard. So for the moment, the gap is addressed by the institute in the form of a guidance note, and my view as an industry, I come from the industry background, of course I've been a practitioner before. My view is that we should not attempt industry-based standards to be issued.
I broadly agree with what Mr. MP Vijay Kumar has mentioned, and I would only like to add to what he has said that even if there are certain gaps which we feel at this moment of time, we should instead of coming out ourselves with some kind of standards, we should either address those areas to the IASB through their agenda consultation process, because every 5 years or so, the IASB has this agenda consultation process through which we can, suggest new areas where these standards can be developed internationally so that we are comparable with the various countries. In the absence of that, for instance, there is a possibility that in our country there is a need which is felt that there has to be some kind of an accounting guidance, in the absence of which within the country there is lack of uniformity in preparation of financial statement insofar as that particular aspect is concerned. So if there is such an area which probably you have in mind is that liquidation accounting or liquidation accounting, in which with regard to which the FASB has standards guidance. In respect of such areas, we may we may have guidance in the form of guidance notes, like Mr. Vijay Kumar mentioned. In respect of the oil and gas accounting, the institute has a guidance note on accounting, oil and gas accounting. Similarly, for such areas, until the formulation of the standards, we can have a guidance. Why I am saying we can have a guidance? Because if we straight away go to the standards, tomorrow there can be once again a pain of transition. That is, if we have a standard now and then tomorrow we have an IFRS which is different compared to our standards, once again one can experience the pain of transition. Whereas in case of a guidance, because the status of the guidance note is somewhat lower than that of a standard, the companies as well as the auditor, they have some leeway in terms of the, you can say, the formulation of the accounting policies. So therefore, to that extent, possibly that can be addressed through these aspects.
Okay, thank you, Dr. Avinash Chandra. I'll in fact address the next question also to you. These IFRS framework, some of these standards which we have adopted from there are very old, in fact decades old. One that comes to my mind is the one on intangible assets. And then all of these have been imbibed and brought into in our indices. So do you think that some of them need to be revisited or re-looked at?
Absolutely. Actually, the standard which you have singled out, intangible assets, IAS 38, even internationally, the concerns are expressed that the financial statements of those companies which are like knowledge based, or for example the internet companies like Uber or Amazon, etc., the financial statements prepared on the current accounting standards, they don't tell the whole story about the value which is created within the organizations. So that is one concern which is being felt. The second concern which is being felt is that there is a gap between those companies that have grown organically, organically compared to those companies which have grown by acquisitions. So when a company is acquired by another company, you bring on the balance sheets the intangible assets through 103, that is Ind AS 103. Whereas the internally generated intangible assets, they cannot be brought in because of the requirements of IAS 38 and the conceptual framework also. So therefore there is a gap which is being felt that these two types of companies, they are not comparable. So therefore there is a concern which is being felt internationally also. And as I mentioned earlier, during this current agenda consultation process of the IASB, intangible assets standard has been identified as a possible candidate for a revision of the standard IAS 38 itself. And possibly when the new agenda is decided by the IASB, IAS 38 is likely to be one of the standards which will be revised. But at the same time, just to express my feeling which I presently getting from the various, exchange of views which are happening at the international fora, the chances are that given the current conceptual framework which is issued by the IASB and adopted by us also, the definition of asset, there is a less likelihood that there are going to be many new intangible assets coming on the balance sheets. What is more likely to happen is that there will be more disclosures which will be brought on the balance sheets. One such disclosure which I may mention, of course, there is a discussion paper which has been issued by the European Financial Reporting Advisory Group, IFRAG. That is, you can have a look at that discussion paper. The title of the discussion paper is better accounting for intangibles, something like that, way to go forward. And one of the suggestions, interestingly, which they are giving is that there are various future-oriented expenses, like advertisement, publicity, training to employees, which have future benefits. So those types of expenses may be disclosed separately in the financial statement. It is something like the deferred revenue expenditure which we used to hold which we used to have in our financial statements earlier, prior to, intangible assets, AS 26 coming in our framework. Of course, the deferred revenue expenditure concept cannot be brought back because that does not meet the definition of asset. But a disclosure of such expenses is being felt that it will give some information to the users of the financial statements as to what are likely to be, some intangibles which are there in the financial statements of the company, and therefore the story of the growth of the, or story of the possibility of the growth of the company can be better understood by the valuer at least. Thank you.
So I think that would also be very important information for prospective buyers if they start putting out such disclosures. Thank you. So now next question is to Mr. Vijay Kumar. We have this old age debate of principle-based versus industry-specific standards, the rule-based standards. So what is your take on this? Do you think we should look at industry-specific standards?
No, I think I mentioned a little while ago, while responding on the previous question, that not fair of industry-specific. But if you're referring to the age-old debate of principle-based standards versus rule-based standards, I think I have no second thought in my mind, and as a nation we have done the right thing thus far, that the standards necessarily have to be principle-based standards. Rule-based standards, even in US the experience is it is prone to mischief. Typically in a rule-based standard you have bright line tests which are either specified or some guidance which is given, which is almost accepted as the rule, and people tend to account around those rule-based accounting. I think the challenge for preparers, auditors and regulators in a principle-based standard is how people have applied judgments given the facts and accounted for the same. So I think that part is the critical part. But my own experience is, as long as there is a reasonably good capacity building happening, particularly in the context of conceptual framework. My own experience is most of us tend to be heavily focused on applying the standards, but I think while applying the standards, it's very important to understand the conceptual framework under which the standards have actually evolved, and if you apply the standards keeping in mind the conceptual framework. And the good part, particularly for India's entities, I would encourage is, since the Indias are all drawn from IFRS, we have very good guidance in the form of basis for conclusions which is available. So it basically gives you a good idea of how the principles need to be applied. So if the conceptual framework and the basis for conclusions which is available in the IFRS literature are applied consistently by all the three, the preparer, auditors and the regulators, I think that would give much more useful information than a rule-based approach. So that's my take on this.
Thank you. So Mr. Vijay Kumar totally endorses the principle-based framework, but he says it has to be read along with the basis for conclusions details. So Mr. Dr. Avinash Chandar, what do you feel after him having endorsed the principle-based framework? Don't you think that somewhere there would be some management judgment that comes in? And because it's all obviously a principle-based framework. So do you think to some extent it could lead to some errors and omissions?
I would not call these as errors or omissions. I also support the principle-based standards. Actually, the principle-based standards, they are based on, they are based on the broad principles. There are not rules. So in case of rules, one can argue that, okay, if the rule is not followed, then there is an error or a non-compliance. But in terms of when there is a principle which has been enshrined in a standard, and the management is supposed to follow that principle, the onus is on the management to prove that that principle has been adequately followed. Let me give you just one example. Supposing for the purpose of preparing financial statements, there is a rule that a company is a subsidiary if more than 50% of the voting power is held by another entity. That is a rule. Okay. If it is 49.9%, it is not subsidiary. Even though actually there is maybe an effective control through various other means, through agreement or some other means. Now, for a company to get out of the ambit of a standard which is rule-based, say 49.9%, is very easy. And you cannot question the company also. If it is 49.9%, even though there is effective control, you cannot even question the company. Whereas in case of a principle-based standard, if it is 49.9%, and by following the principle-based standard like India's 110, and then you can question the company if there is a control, because the principle is that you should look at the control as defined in 110, which is much broad-based compared to simply the 50% arithmetical formula. Actually, and therefore you can question the auditor also, that when auditing such a company, if the consolidated financial statements have been prepared on such basis, then it is not simply a rule. You can bypass a rule very easily, but it is very difficult to bypass a principle. So therefore, I do not think, supposing in the implementation of a principle, there has been an error, the onus is on the management and the auditor to answer. So therefore, one can say that there has been a different interpretations of a principles, or the similar principles, the same principle has been differently followed in different countries. So it could be because of the different situations which cannot be addressed through a rule. A principle can address different situations, but a rule cannot address different situations. So therefore, I do not feel that simply because there have been some instances that the principles have not been followed adequately, that these are to be considered an errors, and therefore this should be a ground for following rule-based standards. I am not for that. Thank
you. Dr. Avinash Chandra. Mr. MP Vijay Kumar, the next question that I address to you is about providing implementation guidance. Are there any international best practices, as IFRS standards are now used in over 140 countries?
Yeah. So, in fact, my experience is largely the last 6-7 years. And when I have interacted with the peers from other countries, almost all of them rely heavily on the basis for conclusions, which is there for all the new standards. And there is some education material which is available from the IASB itself. There's quite a good amount of education material available. And more importantly, there are what are called agenda decisions, which are published on those areas where there is potential diversity. So most of them rely on this literature. There are few countries who have developed for capacity building in their jurisdiction, some amount of education material, which is what we have done in India also at the institute. We have done an excellent job in terms of developing education material for most of the standards. I think approximately 20 material standards out of 41 we have education material. And on key issues, equivalent of agenda additions, of course we don't have the benefit of public exposure. We have expert advisory committee opinions on some of the key issues, which have also serving the purpose of giving adequate guidance. So I think internationally it's pretty much available, and I think in India also that guidance is available. The only point which I'd like to reiterate at the cost of repetition is conceptual framework and basis for conclusions. I find usage of these two documents to be relatively less. I would encourage preparers to rely on those documents as well.
Thank you. And you also said that there's a lot of education material which the institute is making, which actually fills in the gap, and so it does provide a lot of good amount of guidance that is there. Now my last question is actually addressed to both the panelists, and this is something to do with the work that we do. In NFRA, as far as the accounting standards go, we've been performing these FRQRs, and some of them are in the pipeline. The method in which we pick up the cases is it's picking up a sample from the mid-cap, large-cap space and just deciding on certain parameters as to which ones should be reviewed. Other jurisdictions follow a thematic review, or they say that, okay, this year, this is a very important sector for the economy, be it the power sector or something. So let's pick up companies from here, and let's do either a thematic or a certain sector-specific review. Do you think we should adopt that, or what should we be continuing with that? So this is addressed to both the panelists.
So my view, I think P.R. Ramesh in the previous panel discussion did talk about the process of selecting companies for inspection or / review, and that is my experience from PCOB. I'm not sure about how FRC proceeds, but PCOB follows that particular model. And in our country, if we were to follow thematic or sector specific, I would encourage that we do it after some more years. Of course, we can do both parallelly, but I think that has to happen after we do enough capacity building. And I think in the previous panel I heard, and I also heard the chairman of NFRA, his vision for the future. I think it's important that there should be a clear articulation of expectation to the preparer community and the auditor community. What is the expectation? I think once we get there, I think we should evaluate looking at doing both of them.
A mix of two, but in course of time. But at this point in time, please articulate your expectations and what is going to be your target, this thing. Okay. Dr. Avinash Chandra.
Insofar as the inspection is concerned, that is where we are reviewing the financial statements of the companies, and the purpose is primarily to a certain compliance with the accounting standards, if that is the objective. I would like to suggest the thematic and the target specific area approach, because for that limited purpose you may be able to cover larger set of companies. For example, in a particular year when there has been a downturn economy, maybe looking at the impairment of assets on a wider scale may be of interest as to how various companies have complied with Ind AS 36. So therefore, my view would be that it depends upon that as a regulator, one has to be attuned to the needs of the hour. I mean, if a standard is not giving the right results, then it may probably be revised. For example, this IAS 36 impairment, IAS 36 and India, I mean, coupled with that, you know, the goodwill impairment and things like that, they have come to fourth on the table of the International Accounting Standards Board through such reviews, where it was found by, for example, the European Securities Market Agency, ESMA, that during this financial crisis, etc., the impairment standard was not appropriately followed. So therefore, I would not say that one should follow a particular approach. If one can follow a mixed approach also, that you can select a few number of companies for a total review, and depending upon the need of the hour, that where you feel that there are likely to be major departures from the Ind AS, that particular sector or that particular area can be selected. And lastly, I would like to mention that going forward, the disclosures are going to be more important compared to the recognition and measurement, because as I was mentioning in giving the example of intangible assets, the story will be told more in the notes rather than on the financial statements, whether it is goodwill or impairment. Because if you look at the discussion paper issued by the IASB, there also they are going for more disclosures. So going forward, the answers may not come in the form of recognition and measurement. They will come in the form of disclosures. And today, generally what has been seen in the financial statements is that the disclosures are more template based rather than company based. So therefore, more attention needs to be paid insofar as these standards, I mean these disclosures are concerned. So a focused approach may be very useful in that. And lastly, I will just try to correct myself that when I said that there are 3 sources of carve-outs, further carve-outs, I mentioned IFRS interpretation. What I meant was IFRS agenda decisions. So I just thought I will correct myself.
So thank you. That brings us to the end of my questions. If I may just quickly sum up what are the important points that our panelists said. Dr. Avinash Chandra's view on the carve-outs was that we need to phase them out in a fixed period of time. And of course, there would be some legal and regulatory interventions necessary would take place in the practice. On the IFRS, on that intangible assets, he said we need to do a revision, and he in fact said this is under consideration abroad, and so I think it would have the consequential effects because it needs to address the lack of value creation in financial statements. On the selections for the FRQR, which he just now spoke about, in a nutshell, I think he felt we should follow a mixed strategy. Mr. MP Vijay Kumar had similar views on carve-outs, and he said we should review it periodically and then phase out the carve-outs slowly. But what he was emphasizing was that banks and insurance companies must embrace the indices sooner than later. That was one important point that he wanted to make. Then he said we must stick to the principle to principle-based standards and not get tempted into developing industry-based standards. And lastly, I was speaking to him on the sidelines, and he said one very interesting thing which I feel I should share with you, and I actually fully endorsed what he said. And he said that all stakeholders, and particularly the users of financial information, have to actively participate in this journey of excellence in quality of reporting. So basically, it is the users the preparers of the accounts would then move up and deliver to the expectations of the users. So he actually feels there should be, all the stakeholders have a role to say this. So ladies and gentlemen, we've had a very good answers, and from the answers you can make out that this is something which does not just come from wisdom and from reading materials or attending conferences, but it's the outcome of decades of high experience. So it is indeed a privilege for us to have such an erudite panel, and I wish to thank them both for being here. Thank you so much.
Thank you, ma'am and sirs, for the thought-provoking discussion. I would now request Moderator Srimati Smita Jingranji to present the mementos to the panelists. Thank you, ma'am. We are now at the very last moment of the seminar. I would call upon Secretary NFRA, Shri Rakesh Bhanotji, to present the vote of thanks to all.
Honorable Chairperson, members, panel speakers, conference participants, my colleagues at NFRA, and ladies and gentlemen, it's been an intense 4-hour session where we had interesting round of discussions about the relevance of high-quality financial reporting framework. The stage was set by the welcome remarks made by the Honorable Chairperson and the Secretary MCA, and thereafter, Honorable Minister of State gave an outstanding historic background of the Indian history and ethos. Today's sessions on audit quality and financial reporting, independent audit regulators, and enhancing the role of independent oversight bodies such as NFRA in financial reporting quality were very well discussed in the overall context. We at NFRA have gained great insights into the subject by the contributions made during the discussions. I am grateful to all those who have contributed in making the event a grand success. My thanks to the Minister of State for his presence for the inaugural session and his address. My thanks to the Secretary MCA, Sri Rajesh Verma, for being here today and his special address and the words of encouragement. Many thanks to the Chairperson of NFRA for being the guiding light for the seminar. It has been his sharp directions which has helped us in the organization of this seminar. My thanks to both the members of NFRA, Sri Praveen Kumar Tiwari and Ms. Smita Jingran, who have agreed to moderate each of the 2 technical sessions, and thanks to the speakers who have taken the trouble to come in this hot weather. Thanks Professor Bhattacharya, Sri P.R. Ramesh, Sri M.P. Vijay Kumar, and Dr. Avinash Chandra. And my special thanks to Mr. P.R. Ramesh and Mr. M.P. Vijay Kumar, who have actually taken the trouble to travel all the way from Mumbai and Chennai to be here in Delhi. Thanks to Shohei Noro of the CPA OOB, who despite the time difference, it's night time in Japan after all, agreed to join us today and give insights into the Japanese regulator. My thanks to all my colleagues here who have contributed to the events. My special thanks to my colleague ED Shyam Tonk, DGM Arun Kumar, Senior Consultant Mr. V. Kulkarni, Assistant Manager Prashant Dongre, who have been extremely involved in the organization of the seminar. Thanks to Nilesh and Hemani for their presentations. I cannot name everyone for want of time, but all officers have contributed to make this event a grand success. I thank all persons in the audience without whom any event cannot be a success. The audience included not only those who are physically present, but also have joined online. Last but not the least, I thank the Prime Minister, the prize winner, who have taken the trouble to come here, and also those who participate in the online quiz. In fact, there were 27,000 participants in the online quiz. This is the first big event organized physically by NFRA, and fortunately everything fell into place at the right time. To do a seminar on a Saturday evening in the month of June was always a challenge. Fortunately, I feel we've had an excellent event today where everyone contributed. Thanks one and all. Thank you so much.
Thank you, sir. There is an arrangement of high tea in the open terrace on the left of this hall. Please join us for the same and enjoy the high tea. Have a nice evening. Thank you. On the left, on